Welcome. Good morning. Good morning. Welcome. Good morning. Whoa. Why am I hearing this? Hold up. Good morning. Whoa. Why am I hearing this? Hold up. Good morning. Whoa. Why am I hearing this? Hold up. Good morning. Whoa. Whoa. We got sound. Good. All right. Anyway, what's up, guys? Good morning to you. FOMC day. I've been streaming for a while now, but the past couple days I've been on. So if you're new here, all that we ask is hit the like button, subscribe. If you learn anything, if you make any money with us, you can. You're more than welcome to give back to the stream. Um, Other than that, if you have questions, tickers, news, post it in the chat. It is very helpful to trade with a group. Um, you know, if I could, I would. Right? If I could sit there and watch somebody else, I would. But nobody really streams. Everybody wants to trade futures, this, that, and the third. I'm good. I need the equity markets, right? Because the equity markets provide me a slew of sectors, from gold, from commodities to healthcare to tech to the dollar. I can get it all in the equity market. I trade with my own money. What I do may not be right for you. Let me say that first and foremost. I'm not going to be right all the time, okay? But I will manage my risk, as you should too. Okay, this is the first thing you should be doing, is worrying about how much you're going to lose if you're wrong, then how much you're going to make if you're right. Okay? Cool. Now that we got that over with, all I have to do is log in, and we're gonna dive right into it. All right. Again, welcome. I appreciate you guys being here. If you're new here, please hit the like button, subscribe, leave a comment. It helps the stream. That's all we ask. Again, if you make any trades with this, I'm gonna do my best to tell you guys why it is what I'm doing, where it is that I'm gonna get in. Not just I'm gonna try to give you a heads up, and I'm gonna try to at least, uh, you know, make it so that you don't have to, like, we're not here scalping, okay? Um, Yesterday, STX top idea. All right, we were targeting 420 yesterday on this pullback. This was a really nice trade. So we were looking at the 420 calls. They were on this new high, okay, and this pullback to prior day's high. They were like $687 with like an $8-9 ask. And you're going to be up pretty nicely on those. At the close yesterday, you're at 1113 bid ask, 1100, 1300 is your bid and ask. So you're up a little bit. You're up a decent amount, but the percentage on this, let's just say it's up 50% here. We'll say if you got in at $800, that you're paying a lot. Okay, if you paid 800, you paid a lot, and you still made, close to 50%. And that, when you're dealing with high numbers, the percentages, in my opinion, that's the big that's the big thing when you use, right, when you use percentages, right? Because I would much rather have a 20% on $1,000. Uh, I would rather have a 20% on $1,000 option than a 20 or a 200% on a 50-cent nickel option, right? You see what I mean? So that dollar amount's going to be a lot larger, and it's for anybody that's new. It's important to remember that, right? Give yourself time. If you go out 2 weeks or whatever, and you got an option, you got calls that are $600, and you get, you know 20, 30, 40% on that, versus a daily that's going to be like $1, and you get, like, I don't know, you have to, like, try to get 100% just to get a 20, what we give you, a 20% on 2 weeks. Something to think about. Not for everybody, again. But here is a prime example. You've pretty much made 600-700 bucks a contract for less than 50%. All right, so we're gonna get right into it. We're already wasting enough time here. Obviously, FOMC meeting. Okay, that is today. We're gonna get the summary of economic projections. Again, let me also say this: if I don't get right to your question or comment, just give me a little bit, because I got a lot of stuff going on here. What I'm doing right now is I am logging in, and again, I'm using my phone, because if I have two different brokers on, with the other charting stuff I have, with level 2, with the live stream, I got a lot going on, and it's gonna, like, mess everything up, or it could, at least, and to make everything slow. So it's a little rough, and And, I don't mind using my phone, so. So, congratulations if you guys took STX yesterday. That was a really nice trade. We were eyeing that for a little bit. We're going to talk about a few other things. I traded Palantir yesterday afternoon to the short side. Okay. I did trade Palantir for the short side, pretty much a nothing trade. I did make a little bit of money on that, but not much. I got into some 50, I think it was 50 puts for $1.18, and I sold them at $1.30. So I made 10 cents a contract. Nothing, nothing crazy. You can see here, yeah, they closed right around where I bought them, $1.17, $1.20. If you don't know where I'm looking, look at the bottom left of your screen. This is going to be your options chain, your level 2, and we'll switch over to the other one with time and sales and everything. So I was watching PLTR. You have this 50-day moving average right here, right? If you look on a daily chart, you have a bit of a bull flag. So I don't think you're going to get, unless it's to the upside, right? The upside is really where it opens up for you. But the downside, you have your 90 MA, the 50-day, you have some support there. So you're not really, it's, I wanted to target back into that 50-day. But just the way it was acting yesterday, and my thesis on this yesterday was I'm paying a little over $1 for a $2-3 move. It was leaving me about, worst case scenario, even if I don't get to 150, um which was the put target, um which was the strike, excuse me. I'm paying $1. So even if I can get down to 53, I got in on this break and retest here yesterday. Um, and even if I get $2, my contracts are paid for and I got $1 extra move. So I was looking at least, so that's why I chose those out of the money puts. They made sense for the price. Right. So if I paid $1 and I get $1, right, up here at 155, this is literally where I got in. I did not get shaken out there, and I got out right here before the close, it was probably like 154 to 150, or I'm sorry, 354 to 356 when I exited these. I had a limit order at 130. It wasn't like getting hit, so I think I dropped it to like 129, 128. I don't think, I know. I dropped it down, and they filled me. And then it just ripped right afterwards there, going into the close. This candle here, if you look on a 1 minute, look, this thing just ripped. So right there, look at that. That candle right there, bink. And I was out in these two candles right here, just because I didn't like the way it acted. And then look at that rip. So, um, that was my thesis behind that. If I'm paying $1 and I think I can get $2, that's going to leave me at least 100%. Aside from the time, you know. Anyway, um, we're still just kind of hanging out. Okay, so we had PPI data. We're really starting to sell off this morning. This stinks, because if you guys ever struggle pre-market, some ideas for you. If you see setups, you can always use SPXL. You can use 2-3 times leverage pre-market and purchase them and still be able to catch these moves. I was a little busy going over my watch list and some of the things that I'm looking at. So, what time is it? It's 9:12. I gotta hurry up here. Okay, so previous 2 weeks ago, like, it's been the past 2 weeks. I'm watching this Tuesday's low, Friday's high. I'm watching 670. Okay, we'll look for bounce backs, which would also take you into Tuesday's low, Monday's high. Okay, Tuesday's low, Monday's high. You have a wide range up here. Um, so we'll look for bounce backs into this area. We'll set an alert, and we'll see what happens. You have to remember we have FOMC, so we may not get it till later on today, or we may bounce into it, here soon. But you're below this 668, so it's hard to say. You may just get more further downside. To the downside here, I feel like this move's already happening, but I think you got to target down into that 660, the mid, like that low 660. To say 660 to like 662, 660 to 663, which would give you Monday's low. Target that Monday's low and that 200 moving average. Okay. All right. Um, I'm also going to be watching TLT for bounce backs. It's selling off right now. Let me check the 30-year really quickly because I quickly looked at it. Now, this is the 20-year, but see, we bounced above it. Damn it. All right, so we're back above this level. I was really hoping to reject 4.84, but we'll see what happens here. So that was a shake and bake. It pulled in. Actually, you know what? I would actually watch this level here on the 30-year. Okay. If we cannot get back above this 4.86, okay, I want to see if we can get some further downside here. Okay, and I may use TLT as that trade idea, but as of right now, I think you're ending up you may end up just trading higher. Let's get into some stocks. I just think there could be a nice trade here if it takes place. This is the problem. You had a failed breakdown, and which could be a short for TLT. Okay, I was looking for this 4% target, but look at this. You had this nice wedge up here, and you hit your trend line. You pulled in off of it, and now it's bouncing. And anytime you've pulled into this 4.8, it's actually starting to probably act as support. So then I would look for a bounce higher. So the play may be a short on TLT. I know a lot of people are talking about being long TLT, and that's fine. I could be wrong, but I've had that up for the past few months, and I've been watching this. I've been all over the move on TLT to the upside, and I got to be honest. Don't be surprised if the 30-year starts trending a bit higher. All right, that's a. You can also use TMF. TMF would be your 3 times levered TLT, and you could, five. It all depends on how much money you have, but I, you know, I'm not here to say anything, but you can make some nice money. I have made some nice money on it. I don't mind doing it. Buying the triple leveraged ETF. I wouldn't buy the options. I mean, you can. I don't know. I'm not going to comment on that because I just buy the triple leveraged uh thing outright. I trade the shares itself. Um, let's see here. Okay, so we have the queues up. This is insane. So as I'm getting the stream ready, everything is just really sold off. So let's go through some of the names this morning. If you guys have stocks you guys want to look at or may see, patterns or whatever, what have you, please comment in the chat. It also helps the stream out. Subscribe if you haven't already done so. All right, QQQ. All right, QQQ. Looking at Friday's low. I'm sorry, Monday's low. You have this consolidation area between Friday's high and Thursday's low. Um, you kind of just consolidated here, and that's the area that you're in right now. All right, you had a crazy acceleration to the downside, so you have some support here. Keep an eye on this mild level at 598. If you take any bounces you take you get short, you have to look at 598 as like a take profit area. Just to take profit, it's a minor level. It's not a major level. It's a bit of a minor level. So if you got short at 602, okay, and you want to ride that thing down and it's giving you your follow through, 598 would be the target. I'd target 600 obviously, but I think your real trade there is down in the 598. All right, 600 would be roughly around that Monday low. All right, so we have earnings. We have a few things moving here. So I've been watching NVIDIA, and I have an alert. I don't think I'm going to get it. Okay, I have an alert in front of this 184. Okay, I'm going to be honest with you. I think I want to try to take a short on NVIDIA if I get the opportunity. All right, I want to take a. This would be previous lows here. Okay, previous lows at 182. All right, Friday you had a massive sell off. we're below 182. Friday's low is at 180. You have the 200-day down at 170, 178. All right, so we go here. My plan was to hopefully get a bounce back rejection at 182.50 to like 184 into that zone. We're at support right now. So if we any bounce back rejections and we're seeing that the market is still giving us a pullback down into the that we're not making any progress, we bounce. Okay, that bounce gets taken back by yesterday's high. Say on the Qs, looking at like 604, 605. Our target yesterday was 606. For you people that were here, what was your high a day yesterday? 606. And we said we could look for a pullback at 606 to 603, 602. And you literally got the 602. Right? It wasn't like a straight shot down trade, but you got it in a decent amount of time. You didn't have to wait too long. So we are below 602. So what I would look for, 602 is also Monday's high. So with that being said, if we cannot get above yesterday's low on the Qs at 602, okay, if we do not get above this area right here, Monday's high, Tuesday's low, okay, you're seeing anchored VWAP probably meet right down in here. You get a break retest. Then I would look for 599. Really, I'm targeting 596. Again, we have a Fed meeting today, so you're not going to get it probably in the morning. You might, and then you bounce back. I don't know. I'm not making any guesses here. So my point to that, NVIDIA, all right, I may try to get short this name today. You had a failed breakout yesterday and Monday. All right, you had some good news. You're not really making any progress here. And now you are starting to dig into the support level, and it broke this morning pre-market. So I'll use yesterday's low, 182. You can see right now we are rejecting 182, but it may shake and bake. I think you get a bounce back into like 182.50. And then again, you're back above prior day's low. So it's all going to depend on what the market tries to do here. Right now, the Qs are trying to bounce back as I'm talking in the 602. So I'm going to keep NVIDIA on watch. All right, NVIDIA's on watch for me. I want to see if we can get a pullback into the low. I'm sorry. I want to see if we can get a pullback into that 200-day moving average. I would like to see if we could break 180, get a pullback. My target's going to be 178. Okay? 178 on NVIDIA. That's going to be right here. Matches right up with previous lows. Okay? The 200-day moving average, it extends from 178 to 176. Okay, it's this whole area right in here. Right there. All right, previous lows here, 175. So you keep having lows that are in there. Let me go to the daily chart. I don't want to spend a bunch of time on this. All right, so I want to just see if we can try to get into the bottom end of this range. You have the 200-day moving average coming up. You could not get above. My point to this as well is you could not get above that the earnings sell-off. You failed to close above it and hold it and extend. So I feel like anybody that's going to try to get long, I I think you need to watch out for now. For now. All right. You got above there twice. You've rejected 1, 2, 3, 4, 5 times. And you got above it twice. And that level's like 180, like 186. Okay. 186 to 184. 184, okay, is that earnings day low. All right. And it's 1, 2, 3, right? 4. You got above it. 1, 2, 3. You could not extend. Rejected. This is the close, by the way. This line here at 186 is that close from the earnings day here, depending on the time frame that you use. So, all right, let me move on. I'm spending too much time on that. Energy was climbing higher. let me actually like this stream. If you guys could hit the like button. Give me 1 second. Bro. All right. So that's NVIDIA. Let's talk about Palantir. Um Palantir. So you're back above 155 right now. This thing is just in a range. You got a bit of a bull flag here on the daily chart. All right. The problem with this is, and why I got out of it yesterday, I think I've already talked about this. 50-day, 9 EMA, and the support all in here. Yes, I already did talk about this because I told you guys why I did it at the 150s. If you missed it, I took I got short yesterday and made some money on the downside on the pullback going into the bell. Okay, I'm no longer in that trade. All right, but I would keep this level here on watch and see if you get pullbacks off of like 156 or so. You just have to watch. Really, it's 155. 155 is the area I'd be watching because that's your support zone. It's prior highs. It held yesterday. It broke below it, then it regained it. So I would target the 50-day moving average and 154 if you want to get short, or if you get short up at like 158, 156. You know, prior day's high. Okay, that I would look for that. For me right now, no trade. Okay, stocks that can move because they have a reason to move. Macy's, I have an alert at $19. Okay, that's your previous highs. All right, $19. It's already pulling back the prior day's high. Okay, you're testing prior day's high here, so this is technically a breaking a retest at its 200-day. Look at that, 200-day moving average. So I may change my thesis here, and I've made some really good money. I'm going to tell you guys right now, I've made some really good money on trading Macy's after their earnings. All right. So you have previous lows, all in here at 1750. All right. Look for this area. You've got your hourly 9 EMA catching up as well over here. Any room to see it's going to, the market's looks, so you're breaking. All right. This is not going to be a trade for me anymore. All right. Um, Still have Lockheed Martin on watch here. You broke below those previous lows. Okay. We are below those previous lows right there at 640. Let's go to a different chart where we can actually see these things. All right. So you're bouncing back into the previous lows, previous highs here. That's going to be up there at like 640. All right. Yes. So you have yesterday's lows. I would keep 640 on watch. See what you do up there. It extends about $4 to $5. I would watch this entire area up to like 645. Okay, if you see that it gets up there, it tries to hold, it fails, it bounces into it. That's probably our key that we could get like a nice little 20-point move to the downside and catch this 50-day moving average. Maybe it's a no trade. Okay, move on. Rocket Labs 640, 645 pullbacks. We'll see if you get that on Lockheed Martin. Just an idea. All right, Rocket Labs, you had a nice bounce yesterday. Bounced right into that 50-day. You double topped up there. It could not hold. Now you're back below this double top pivot high at 75. Let's go to the daily chart. Go to the daily chart because you had a nice consolidation there. I want to see if you hold these previous highs here, you pull back into like the 9 EMA 20-day moving average. These tight price actions can actually be a very bullish thing. Okay. But you need to see pullbacks hold, and you need to see that volume come in and for us to extend and start trying to close above that 50-day. It could take a little bit. Let me give you an example before this bell opens, before this bell rings. Again, it's a kind of a slow day. Look at Goldman Sachs here. We caught this. Look at this. You consolidated very tight price action. This was like almost 3 months. You broke out, it pulled in right there, and that was it. You had a gap up. You gapped up off of the pullback here. If you can see it, right? It pulls in. You came in with the gap up the next day. And what did you do? You retested the 50-day along with these prior highs right here. This was a huge trade for us. And then look what it has done ever since. Look at that. Look at what it's done ever since that. Bang. Keep an eye on it. Rocket Labs has that. The thing is, how long is it consolidated for? Not very long at all. Okay, it hasn't consolidated very long at all, but that type price action is a good thing, in my opinion. I would keep on watch. $70, your 20-day moving average, that 9 EMA. You want to try to just hold it. Look for a pullback hold and see if you can extend and get above that 50-day moving average. Okay, so that is Rocket Labs. It's also trending this morning. Let me turn this down so we don't get our ears blown out. I'm going to take the day as it comes. I think there was some news on SoFi yesterday as well. Keep an eye on Bitcoin. Bitcoin is rejecting 75,000. SoFi is not really doing much here. It doesn't look like. I mean, it's trying to bounce into these previous lows here, but it sold off, bounced back. Let's go look at Amazon. So far right now, guys, this is the week. It is what it is. I just don't have much, and that's okay. I'll just keep trying to do what we do. But yesterday we had a very nice trade on STX. Again, I think I talked about it earlier. What we targeted 420 yesterday. We said we look for that pullback, and we got to 420. I just had an alert. Delta Airlines. So here we go. USO. All right, we are back above 120 here. Back above 120. Where's Delta at? All right, so Delta ended up bouncing above that 20-day moving average. It's above its 20-day moving average right now. Below prior day's high. I tried to get in on these. They weren't very liquid, but as time goes by, that's a nice break and retest there, to be honest with you. All right, QQQ is bouncing into 602, and it is trying to reject. Let me pull this up. Let me get everything ready, and we're going to get our day going. So let me pull up a video real quick. Let me get this down. Bada bing, bada boom. Damn, it's already rejecting. Options. Shit, we're missing it. So there you go, guys. This was one of my top ideas today was NVIDIA short, and it's happening now. Should have been a bit more ready. So we're back below prior day's low. Also, there was a 15-minute chart set up here as well that I should have shown you guys. I forgot about that. So you're pulling in to close that gap from that prior Friday. All right, so here we go. Let's look for this bounce back into prior day's lows. Let me eye up. Okay, so for the 180s, you're only paying 80 cents for the 180 puts. And if we get a decent move here down into that 200-day moving average, if we get it, and this market's going to pull back for us, 80 cents on a $2 move, $3, $4, if not close to $4, if we get back up into this 175, which would mean that they go down to probably 60, 70 cents for the 180 puts. Wait, March 18th. Oh, today's the 18th. That's why I'm like, this is why you got to watch, because they started doing like Monday, Wednesday, and Friday options. I'm like, whoa, why is that so cheap? There's no reason that should be so cheap. It should be that cheap at least. There's a lot of volume on it though. I'm not buying this far out of the money, but the 175s for 75 cents, you get $2-3 on this move. It's already happening. I'm gonna miss this trade already. No, I'm not. I'm good. I'm good. We're good. We should get a bounce back here. This is my target down here, in case you're not aware. This is really the target, that 200-day moving average. I really want this. I really want this trade. Take profits in front of Friday's low. The dotted line is going to be your first take profit. I'm not going to get this. It's not happening. I'm not getting this. You should get a bounce back here, but it's giving you the extension right now. The Qs are just sitting still at 602 or 601.75. You should get a bounce back. Should. You're pretty extended here. So I'm going to look for a pullback. See if we can't target that pre-market low. All right, so 155 broke again on Palantir. Let me see. I want to make sure I'm on the right side with a chart that has volume and everything. So NVIDIA's already got some low volume this morning. I need something that's got a lot of volume. If you guys are here and you see anything that's got a lot of volume, okay, the trade desk. Okay, the trade desk is one here. This has got some very nice volume. Let's go pull in. Actually, I should have set an alert. What was the news on this? I think there was something about their. So they have it downgraded, but I think there was something with their balance sheet. Previous lows, previous highs here. Let's see here. Just trying to get back above it. All right. We have Oklo also reported earnings, but it's doesn't seem like it's going to be a trade idea for me because it's just you can't really, in my opinion, you can't really tell where this thing's going. Right. You can set an alert up there in front of that 20-day moving average at like 63, 62, 80, but like I don't know what you do with this chart. I don't know what you do with it. Let's go check in on Macy's. We'll go check Lululemon. So you're consolidating up and above prior day's high. This thing has some room. I'm going to tell you guys right now. This has room. If you just if she decides to extend, right down here off of this zone, that's almost that's 6.5%. You can make some good money off of this. She extends. I know because I've done it. I need to find stocks that are in play though this morning. Which Macy's is. Okay, so here's NVIDIA bouncing up into this zone. We need that rejection there. So I'm looking at March 20th puts. Everything's freezing. Dude, everything is just acting crazy. Okay, so that's 180 there. Be patient here, guys. Be patient. Okay. So I have the 180 puts for Friday, 1920. For Friday. I'm just going to be patient here. So, because I think you could. Let me see here. Shit. Let me look at XOM real quick. See, I don't want to leave this. All right, so let's watch this 182 zone up here, guys. Let's see what happens here. So far, we're getting a little bit of low volume coming in, which is a good sign. You're up at Monday's high, Tuesday's low. You're above on the Qs. You're coming into that. Shit. Come on, you son of a gun. 172 now. Yeah, so they're 172, 174. I have the option prices up here. I just want to see how we react here. And I'll just keep my stops tight. So we rejected that. 160 now. SPY is at or above. Shit, I don't know where I have the alert at. Okay, so we're at that zone. We're at prior day's low right now, guys. You're right there. I'm not doing anything yet. I want to see what we do here. Okay, so now it's going green. Right now, NVIDIA is technically, it's flat. So you're testing prior day's close right now. Just sucks. Damn, what a wicked tail. Where is actually just I'm trying to get a view of the land real quick, guys. That's all. I just don't like that I don't have much time. So I need to get the move in my favor or not. Since I'm looking at weekly options and not 2 weeks out, I need to get this move in my favor. More sooner than later. We're back red. Still green. You're flat. You're flat right now. So I got to be honest. I'm wondering if 183. Okay, so here's our first look above and fail. That's your first look above and fail. There's contracts for the 180s. Okay, we're 160. You got as low as like 160 to 163 in that zone. And she's going to go now, of course. Come on, give me another tap up there. See, this is what it's doing. It's just going up there, and then it's just immediately rejecting, which is a good sign. But I would like to see us bounce back into it and affirm it again. If it'll let us. Is there something I'm missing here? Is there something I'm missing? Damn, back to 180. You just made your day right there, and it hasn't even moved. I have 5 contracts up, by the way. I have 5 contracts up. Nothing crazy, because I want to be able to... Unbelievable. Okay, the Qs are rejecting on low volume. There's something I see here, and that's like 183, right? There's like 183. My entry, honestly, was up there at 184. That's what I wanted. Let's see what happens here. Let me see something. All right, so here we go. We're getting another little test up there. So we got up above. We failed. What happens here? What happens here? This is the question. Do we reject again? They have pretty tight. I don't think I'm going to get 160. Right now I'm seeing 165 bid, 167 ask. I'd like to get like 160, 158 or so, but I don't know if I'm going to get it. I have a limit order right now at 160. I'm just watching. I haven't sent it through. 167. Why did they raise it so high there? 170 now. What? I hate when they do that. I really do. I hate when they do that. Bro. Bro, come on. That's it. That's the entry right there, guys. It's probably the entry right there. All right, the Qs are trying to bounce right now. The Qs are getting a low volume bounce back into that anchored VWAP. Just hang on. Be patient here. Be patient way. See? All right, what happens here? Now I want to see what happens here. Does the shift change? Do things change? Do you get an extension now back off of this level now that you reclaimed it? And then the next level I watch is 183. If you can't hold it, then that's a good sign. So far, you're testing yesterday's close and Monday's low. I just had it right there. Look, in that low volume. This might be a long. I'm not going to make any guesses. We're going to find out in a second. What time is it? I'm going to keep my eye on this. So it's 9:47. Do we have anything at 10 o'clock? 9:45. You have the interest rate decision for Bank of America or for Canada. Just going to market order into this. I'm not doing anything yet. I'm not in anything. Okay. Just be patient, guys. Look for this. And we're there now. So, what is that? 182.50. 182.50. 182.50 looks like a good zone. That's your prior lows. 182.50 right here. That is a really nice area. That looks good. That could be a nice rejection point at 182.50. So let me go back. All right, 182.50. Again, if I don't get to your comments, just give me a few minutes here. 182.50. March 20th, 180s. Let me actually look. Volume 9. Come on, let me get 182.50. Yeah, you can see here this pre-market pivot low is right up there at 182.50. EMA on the 15 minutes, also right there. Shit. It's the trade's happening now, it looks like. Let's see here. No, it's not. It's just hanging out right now. All right, what are you going to do, Q's? I need some sound. Whoa, 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 whoa. Why did I log out? What the fuck? Let me make sure they didn't film me on those. Okay. We're not. It doesn't look like you're going to get 182.50. I would really like it if we did, but damn, trade might start working now. All right, so the Qs are looking like they're trying to pull in. You just don't have that much volume. I may take this, but nice job if you got in up there off of that prior day's low. It felt like why it just feels like 182.50 though is the feels like 182.50 is your mark. Did we get there? Oh no, it was showing me something else. All right. You're not getting any extension volume to that downside. Yeah, it's still showing me like 182.50 is the 20th. Okay, we got March 20th, 180. No, no, go back. 166, 164, 160. Hi, Turkey. All right, let's see here. Please, just hold on a minute. All right, 155 on those. All right, I want to see what happens here at 182.50. I'm trying my best to stay patient. Where's SMH? First off, where's the SMH at? Let me all right, so the SMH is you got a little bit of room to the upside into that resistance zone. It's like a little bit of it's the start of a resistance zone, which is up there at $400. Okay, so 30-minute chart way. 30-minute chart way. All right, so you are rejecting there. So we have 156, 157 on those contracts. Let me pull this in a little bit. Pull that down a little bit. Pull that down. All right, Iran warnings. Gulf producers evacuate multiple sites after Iran warnings. Let's go back. Let's go. All right, so we have the 30-minute going negative, increasing ADX, ramping up, hourly chart, trying to go red as well, trying to go negative. All right, 182.50 is the zone that I'm watching for. So you had a low, you put in a new low.
And just confirmation from the White House, so they do announce they have issued that 60-day waiver of the Jones Act shipping law.
How loud or not loud that was. So you put in a new low here and it did not confirm it. Just watch for that. I'm watching 182.50. I'm trying to be patient, guys. I really want to see if we can get 182.50 again and what happens there. I know it doesn't look like it on here, but there's a nice area at 182.50. That new low there did not confirm, so could be on the wrong side of the trade there. What happens here? 182.50. We have some volume on our side. All right, QQQ looks like it's wanting to start pulling in off of 602. All right, so here's our bounce into 182.50. Right there. Let's see what happens up here. There's that pivot high. So Qs are at Monday's high. You're like trying to. You look like you're getting like a break and retest on that high. All right, so here we go. We're bouncing right into 182.50. 145 on those contracts now. So here's your rejection. You can see that's the NQ. I'm going to miss this. Let's see here. So there's our previous high right there at 140. Come on, you can't give us. Oh, wait, it already did, didn't it? Let's see. Yeah, right there. All right, so the NQ is, you can see at the bottom left of my screen, pivot low, pivot high. You have that Tuesday and Friday's low right there. You're underneath of it right now. Okay, you're underneath of it. So let's see what happens here if it is going to get back above it. It looks like it's trying to. Looks like it's trying to get back above it. And if it does, you should see at least 6,775 on. Oh, that's the ES. I'm sorry, that's the ES, not the NQ. All right, oil's ripping, guys. Oil is ripping. Let's back up to new highs of the week. Okay, so we're back. NVIDIA's back above that.
And now to that factory orders data for you. Expected up 0.1%. Was final revisions.
We're just not moving here. The QQQ is still just like right around where we opened. Look at this. You opened up at 601.52 and you're at 602. You haven't moved yet. But here you go. You see this pivot high from Tuesday, or that pivot low from Tuesday, bink, bink, double bottom. All right. And then you have Monday's high right here. So watch 602.50. This is going to be an important area. Let's go look to see if we have anything coming into it. I think the 15-minute trade line should be starting to come in there. There it is. There's your 15-minute trade line. All right. You're starting to bump into that. So, which is pretty much where your anchored VWAP is also. I'm going to keep my eye on NVIDIA. Because I would like this trade. I think we could get a nice trade off of this if we can get this thing back down in there. You're just
and the data that's up 0.1% as expected.
or Monday,
the factory orders X transport that's up 0.4%.
182.50. We're right there. I'm gonna try this right now and scalp this. Let's see. That was non-confirming. What time is it? It's at 10 a.m. Do we have any data right now?
And durable goods, those orders are unrevised, unchanged.
Unchanged. We just don't have the volume to that side of the trade that I want. I feel like I'm trying to force this trade. That's exactly what I'm trying to do, it feels like. It feels like I'm trying to force it. Maybe we try to stay patient for 183. $182.50 is still rejecting, guys. Look, there's that break and retest at 182.50. Let me. Oh man, give me. Please don't go on me now. Qs don't have much volume there as far as the. All right, it's breaking above. Yeah, there's not much volume to the sell side on the Qs. Come on, bro. We'll see if we can get 183. Let's see something here. I wonder what Palantir's doing. I will look at that in 1 second. Okay, look at that. So there's our 4-hour. There's our 4-hour trade line. When you know it. When you know it. Look at that. There's our 4-hour trade line right in our way. Yeah, so we still held again. 182.50. You're still not making progress off of that. Not making any progress off of it. It's just the thing is now when you pull back, you're pulling into support. 136 now. Here goes the Qs. They're trying now. 182.60. 182.60. And that tail got ate up. It just got ate up again on the Qs. The ES is trying to hold. Here's the Qs for you. Okay. You can see that's a break retest of Monday's high, Tuesday's low. Okay. Right there. The half hour chart really shows it. All right. So you have a lot of open space up here. Maybe you run a test of Tuesday's high, but that's Friday's high, Monday's high, Tuesday's low, all right here. I didn't even hit that. So there was a quick reversal. It started to sell off. You see that tail. Okay, there we go. Man, I was really hoping to be able to get a pullback on NVIDIA here. It might be hard to do this stuff in front of SNDKs bouncing again as well. It may be hard to do this in front of FOMC. There it is, another one. I'm watching this pre-market pivot low here too. You haven't retested it at 183. 127, 128 now.
Comments from the US National Intelligence Director Gabbard noting that the Iranian regime appears to be intact, but largely degraded by the ongoing US military operation on the nuclear enrichment program, says that was obliterated in the June strikes we saw in the recent years. So again, the Director of National Intelligence stating the Iranian regime does appear to be intact, but largely degraded.
All right. Energy's trying to pull in here. We will be live for FOMC. Just seeing if we can't try to get something going here. Kind of build a cushion under us. There you go. So right now you're right there. I'm gonna put. And look at that. It just worked right up above it. It hasn't closed yet though. It's a 5-minute candle. Look at that. You got a nice increase in volume as well up there. I just think that's a little strange. You went right down into the zone, but you never filled the gap. It's just a little weird to me, if you want me to be honest with you. You've pulled right in all the way down in there, but yet you didn't go in and fill the gap. That's a little strange.
Just further from the US Intelligence Director says Iran and its proxies do remain capable of attacking the US and allied interests in the region.
Just yet, but I am watching this candle closely. I feel like I'm still trying to force this trade. Yeah, I feel like I'm going to force it because the daily chart, you've reclaimed it. You are green. 90 MA is right there. So let's just wait. Let's just not make dumb decisions, guys. Let's not make dumb decisions. Go take a look at some other names. Damn, they're down to $1 now. Maybe I will get my 184 entry. Maybe I will get the 184. That would be really sick. Especially if we get so far extended, and I get 20, 30 cents on these contracts. If I can get that on a pullback, go ahead. Just go up there. Just go ahead. Go do it. Market just wants to sit sideways. This is insane. They do not want to pay anyone. They don't want anyone paid. So if you're selling premium on the overall markets, you're doing great right now. You're just chewing up premium, especially if you're going after those dailies. right? If you're selling dailies, man, the Qs are still at 602.75, and we opened up at practically six, like call it, yeah, it's 601.85. So you've moved 60, 70 cents. You haven't even moved $1 yet. So you're doing great if you're selling premium. I think selling premium is honestly undervalued. I really do. I think most people don't give it, especially people with smaller accounts. I think it's perfect. You can do really well for yourself. You can see your account start to grow. If you do it correctly, you got to be able to do it correctly. It's not just, hey, let me sell premium and think I'm just going to get, it's a free ATM, because you do got to sell them correctly. And, you got to sell them correctly and then buy them back correctly. If you could, also, I know you can, hit the like button for me. Just trying to see the, let's see here. Wow, this is wild, bro. Whatever. I would love to see this thing fail. Damn it, man. I'm not upset or anything just yet. I'm not, I'm not stressing it. Here in a little bit, I'm going to go through some charts after the morning trading session. Just want to know kind of what's going on out there. Okay, so man, I was really hoping for a 184. If we can get 184, that would be sweet. I don't know if we're going to get it. You have to be careful here because you're going to have some support here. Now, so now you've broken below it. Okay. So now we've broken below it. Abby, please give me a second. Please give me a second, Google. Just give me a second.
So on the geopolitical front, seeing that Pakistan will temporarily be pausing military operations against Afghanistan. That will be halted between the 19th and the 24th of March.
Damn it. There goes the Qs. Oh, man. Sit down, please. Sit down, baby love. I know. I'll get you some. I'll get you some more food in a minute. I'm sure you ate all your brekkie. I'm sure you ate all your brekkie. for this zone right here for a bounce back rejection. Watch for this zone for another bounce back rejection. See if we can get it. Okay. I'm not gonna get this trade, guys. I'm not gonna get it. It's gonna play around with me all day. I don't think I'm gonna get it. Yep, I'm not gonna get this. It's not gonna let me in. Maybe it does. Let's see if we can get another test here on like this 5-minute and look for a bounce back into like 183. See if we can get that. It needs to have lower volume though. I mean, you're trying to get, now that you're above it, you're trying to get short right into to a support level, but I think I gotta say, man, I think NVIDIA is about due. So there's that break retest of that pivot low on the 30-minute chart. It's a minor level. I think that 200 days calling us now. I just think anybody that was long, you are back above this level here at 182.50. Yeah, 182.50, like we've been saying all along. I need you to get over here. I love you, but you got to give me a minute. I'm sorry. So you just failed to hold above the daily trade line at the bottom right of my screen. Now it's trying to get back above it. See what I mean? This thing's just playing the hell around. It's not really giving you technical bounces, reversals. It's just got a mind of its own. I'm going to say, though, if we reject this area again up here with a low volume bounce into it that we somewhat just got, then maybe we'll give it a shot. But even then, I don't think this thing is trustworthy yet. I don't think it's giving you directional momentum to be taking it, honestly. $128. All right, so we're rejecting that high again. The Q. All right, so the Qs are taking their time. They're taking their good old time here. Bro, I need to know what's going on out there. I need to go play something. There's nobody here, so I'm just going to. So here we go. You have this Monday's. I mean, the market knows what for the most part, what we're going to do, but the question is, do they raise or lower the 2028, 2029 targets? So keep an eye on that 595 if this thing starts to get going. Where's my new stuff? It should be stapled right to it. There we go. Okay, so a bounce back rejection would be nice here on the Qs at 602. See if you can get another bounce back on the 15-minute chart, and then I would look there to see what happens. Again, we opened up at 601.50, and you are at 601. So you haven't moved. You haven't moved
on the oil flows from the Kirkuk facility in Iraq, so those exports to Turkey's Cayenne port, they commenced at 170,000 barrels per day and will gradually increase to the full 250,000.
Where am I at? 126, the low 120s. I may go for this. All right. I'm not in it yet. I just about was. Look at those SMH. Just trying now. So they're at 130. Shit. I could have just got it at 124. Damn it.
So next up on the schedule in 10 minutes time to get the weekly EIA inventory data. For the headline crude, we look for a draw of 0.58 million. Prime was a build of 3.82 and the private's a build of 6.6. Distillate a draw of 1.5, prior a draw of 1.34 and the private a draw at 1.4. Gasoline a draw of 1.4 is forecasted. The prime was a draw of 3.65 and the private's a draw of 4.6. Cushing, that's seen at positive 0.117 from the private figure of a build of 0.8, refining at 0.4% from 1.6, and production that last stood at 13.678 million.
I'm gonna go look around real quick and let this thing. I'll set an alert and see if we get back up here. All right, I'll set an alert. See if we test that one more time. Okay, you're starting to go positive now, which is I mean, this is a nice break and retest off of this support level for pre-market at 183. There's the bounce into it. Let's see. Come on. Hit it. Give it to me. Just doesn't want to do it. I'm going to have to change it real quick. Look, it did not want to hit it. That's so hilarious. That's so funny. Okay, so that 90 MA is right there. Bouncing into it. Hourly. Rejection off of that as well. Shit. It's all right there. Everything is right there at that zone. So, wow, that's actually insane. That's actually insane what I'm seeing right now. I don't think I've ever really seen that where just about every time frame the 90 MA is stuck between that 182.50 and 183. It's literally across all time frames, everything right there. It's the same spot. It's kind of funny. You rarely see that.
And further, as we go through the bottom of the hour, we get the start of that press conference from the BOC. So they did leave their rates on hold as expected. There was a small adjustment to some of the language around the policy rate being appropriate. Much of this was keeping their optionality open given the Middle East situation, with the general take being that they're willing to look through the immediate inflationary impact, but will take action if it becomes more persistent. While on the growth side of things, says it's too early to make an assessment.
That's a break and retest to the upside. Let's see if you squeeze through this 183 level. Let's see. Can you do it? It's gonna be the question here. I mean, there's just no movement on this damn thing. If we get back down into the low 20s, which I don't think it's going to give it to us, it's not going to. If I could get these for like 122, I would take it. I just would like a pop into that 183 again. There you go, please. All right, and then our we're going to see here. Okay, so now you're back
On the
above
energy
it. Close
front,
the book.
forecast from Citi, they look for Brent in a 110 to 120 range in the next few days, given the conflict-driven supply disruption. And then their bull scenario looks for a 150 to 200 range in the scenario Iran targets more energy infrastructure or the Hormuz situation escalates.
This is so weird. This is so weird.
Elsewhere on the energy front out of Italy, the WPM says they will be proposing a price cap on petrol. And again, at the avoidance of repetition, further upside in the energy space and additional pressure making itself known across both European and US equity futures does come as we do see fixed income either tick to or remain at session lows.
All right. Unbelievable. Unbelievable. That's so see. Fuck it. You got it, NVIDIA. You got it. Just go do whatever you want to do today. I'm done watching you. I don't give a shit. This thing's just being a fucking jerk off. Excuse my language. I'm gonna go look around and go through some charts, guys, and get ready for the day.
take a look at the market. Easy to forget that early this morning, futures, Mike, were quite constructive. We were looking at a third day of gains, a lot of positive commentary overnight in Asia. Action was fairly good. Kospi up 5. Lost a lot of ground. Every sector now red except for energy.
Yeah, WTI crossing above 99, not really responding to the downside from that announced waiver of the Jones Act. Probably part of the story. Plus, you know, we're up 1.5% this week. It's a lot of room to retest on the downside.
Right. About 30 minutes into the hour, some big movers we're watching today. Mixed results out of General Mills. Organic down 3. That was worse than expected. That said, they did reaffirm the guidance for the full year. Macy's in the green despite a kind of a cautious full year outlook. They beat sales and profit expectations. Their CEO tells CNBC the company shoppers have shown, quote, continued resiliency in recent weeks. And then there's Williams-Sonoma, top of the S&P, better than expected numbers, same-store sales, strong full-year guide, and a div hike on the quarter as well.
Well, time for a CNBC News update. Dom Chu has that for us. Morning, Dom.
All right, good morning, Mike. So Israel's foreign minister said this morning that Iran's intelligence minister was killed overnight in strikes on Tehran, the third assassination of a high-ranking Iranian official over the last 2 days. Israel says he was in charge of the regime's, quote, internal murder and repression system. Iran confirmed the deaths of 2 other top officials yesterday. The Associated Press projects that Illinois Lieutenant Governor Juliana Stratton won Tuesday's Senate primary in the deep blue state, beating out 2 sitting House members and a string of other competitors. Stratton will now face former GOP state party chair Don Tracy in the general election. They are looking to replace Senator Dick Durbin, who has held that seat for 30 years. And Amazon is reportedly planning big cuts in the number of packages it ships through the U.S. Postal Service. That's according to a Wall Street Journal report. It says the decision stems from worries at Amazon that the company would not have enough time to optimize its network if the Postal Service rejected its bid in a new auction process for the USPS last mile delivery services. Big partnership there. A lot of business transacted that way, Mike. I'll send things back over to you.
Sure, Dom, thank you. After the break, Goldman's co-head of commodities is with us, talking about the breaking news this hour around the waiver of the Jones Act. Plus, Washington State is set to pass its first ever income tax, and it's got married couples concerned. We'll explain why when we come back. Welcome back. President Trump this morning waiving the Jones Act for 60 days in a bid to calm oil prices, which are higher again this morning as the war in Iran escalates. Let's bring in Dan Stuyven. He is co-head of global commodities research at Goldman Sachs. And Dan, just your initial thought on whether this will loosen things up at all, whether in the product markets or for crude itself?
By relaxing the requirement that ships transporting oil and gas have to be U.S. ships, you could expect some modest relief for fuel prices, especially on the U.S. East Coast. Based on academic studies, you could see some relief in the tune of roughly 10 cents a gallon, with the biggest effects in places like the East Coast that are net importers.
And I guess, Don, if you could kind of do the hierarchy of concerns here as we look at these markets. So, you know, we look at WTI and Brent in terms of spot. We're looking at the forward curve also move a little bit higher, but then a lot of focus on the regional variations, Oman crude shooting higher in price, and then this bottleneck with refined products. So where would you go first in terms of trying to highlight the potential impact in the short term?
Yeah, so the tightness and the upside pressure on prices sort of follows the following ranking. The greatest tightness in Asian refined product markets, especially for heavy products such as jet fuel and fuel oil. Second, a very significant tightness for Middle Eastern crude grades such as Oman and Dubai. And third, significant upside price pressure, but so far more limited tightness in the Western crude markets, such as WTI in Oklahoma and Brent in the North Sea. Ultimately, consumers and businesses pay refined product prices. That's ultimately what matters for the effects on inflation, real income, and GDP growth.
Don, of course, the news today is this attack on the South Pars facility in Iran, and this notion that upstream infrastructure is going to be considered increasingly a legitimate target. How much of a danger is that for price?
Yeah, it's a very important upside risk to prices. I think the top two upside risks to oil prices are, one, a lengthier disruption of Strait of Hormuz flows, and second, the possibility of persistent damage to energy infrastructure, whether it is export facilities or production facilities, once the strait reopens. This is the largest oil supply shock in history. For now, it's still relatively brief. But if I review the 5 largest oil supply shocks in history, on average, 4 years after the start of the shock, production in the affected region is still about 40% lower than before the shock, perhaps because of damage to infrastructure or because of weak investment if insecurity continues. So this is a very important risk to watch. And so we do think that the rise in oil prices we're seeing today, especially for Brent and non-US benchmarks, is appropriate. We think the risk premium had probably been somewhat too modest relative to this very significant upside risk to prices.
I keep thinking back to your base case in the very early days of the conflict was for a pretty quick reopening of the strait. And I wonder if your thinking at the time was that there would be a plan to secure that passage. And when did that change?
Yeah, so obviously the length of the disruptions is a critical assumption. I think the comparative advantage from our team is really translating those assumptions on the geopolitical and shipping side into prices, risk premia, scenarios, and then help investors to track the data. But yes, with every day where Strait of Hormuz flows remain low, I think the upside risk to oil prices is significant.
And at this point, I know there's sensitivity to how long the closure lasts and how long the conflict lasts, but where are you settling on ultimately where you feel prices will go? You mentioned that you felt like the prices today are appropriate and maybe perhaps understated?
Yes, so if I look at our base case forecast where you see a gradual reopening of the strait in the month of April, our price forecast is somewhat above the forwards in the near term. Because we think that the risk premium will build until the market increases its confidence that a very lengthy disruption is unlikely. But under our base case, where flows do normalize over the month of April, by year end, we see oil back into the 70s. But two very large upside risks here. One, the possibility of a lengthier disruption. If we, for instance, were to see 60 days of very low flows, as opposed to our 3 weeks base case, our models would point to oil by year end, so not the spot price, but oil by year end in the low 90s. And second, the other key upside risk is potential damage to production, potential for oil even after the Strait reopens.
Cool.
LPA. BATL. LNKS. 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 LNKS.
So it looks like we're not going to move
LNKS.
today. So what I'm
LNKS
gonna
showing
do is I'm gonna
activity.
do some looking around, see where I want to be.
LNKS.
Positioned.
LNKS Jeep stock up
Where we wanna finish
15%.
the week.
LNKS.
If this, then that scenario. So I'm going to eat and play some Bloomberg, and I'm going to go through some charts. If you have any questions, you can throw them in the chat, all that fun stuff.
LNKS. LNKS Jeep stock ripping 20%. CREG is expected to resume in 15 seconds. Audit. CREG resumed. AIM. STIM. AIM. CREG cheap stock tanking 15%.
VSTM.
She's good, bro. She's good. She's good.
GPGI.
She's doing
AIM.
good. I appreciate you asking. How's everything going for you? I just have the mic off because I just want to eat real quick. So we got NVIDIA got above that 9 EMA, could not hold it. I wouldn't mind being back in those NVIDIA puts. I just need to get them for the right price again. If we can get down into like the low 120s
LIDR. LIDR.
ALDX. ATGL halted. LNKS. ARTL.
If I can get them for like the low 120s, I would.
LNKS.
Right now, I'm gonna look for like 182.50. I think 182.50 again is a nice area to see if we can get a rejection and try to get a pull in. What I'm looking for is like
OKLO.
Friday's low. I feel like Friday's low to fill the gap, like that 180 zone. It could be a really nice target.
Agro. ARTL. Agro.
I just think everything so far is leaning more to an upside move, right? So I feel like the direction in my analysis is wrong. I have a few
Agro.
things that say,
ARTL.
this could be short,
Agro.
but I feel like, oh, what?
AIM.
Arlo.
LNKS.
Oh shit.
LNKS. AIM.
Oris. Oris.
Did she just say
Oris.
Horace?
Oris.
Yo, Horace, ho.
Oris.
Give me 1 second. I'm still watching NVIDIA though. Of course, she's gonna just go ahead and start going. All right, all good. No big deal. No big deal. All right, I haven't done much this week, guys. I'm gonna be completely honest with you. I did miss. What trade was it that I missed? I think it was Monday or Tuesday. We had XOM. I tried Delta. I did trade Palantir. Oh, STX. STX yesterday. This was a really nice trade for us yesterday. Did you guys take it? Probably not because nobody was here. But all day long on that pullback to prior day's high, we're like, hey, 420, 420, 420. Our target today down here, 420. If we get some upside, we should at least get 20 points. We were up 10, pullback. That leaves us 10 more points. Where'd you close at? You closed at 421.17. And believe it or not, that's a mild day, roughly, for that for the ATR on this name. Let's go look at SMH. The old SMH. Not moving. Not moving. Everything seems pinned. This could be a nice I think where it's at right now, if you see this, I think if you see this low of day come in and break here, that could be nice. You get a little follow through, I think, if you do that. Excuse me, sorry. XOM, we talked about the longs on this name yesterday. Where's it at today? So now you're below yesterday's low. That was a nice move yesterday. I saw the pullback in that, and I did not get it. Look at that. That was a nice move in the XOM yesterday. Let's go look through. Dude, this thing's going. Kratos is going. What's going on with Kratos? Is this going to be a buy? So you bounced off the 20-day moving average. Is there any Latin America's governments are shopping for drones? One company just walked into the room. Airbus, collaborate, Kratos and Airbus. All right. If you guys have tickers, if you could, please throw them in the chat. Hit the like button. That would be awesome. Let me know how you're doing. How's your trading week going? What are you trying to work on this week? If you're trying to work on anything at all, what are you watching? I need to find out what the hell is going on here. Well, I mean, I kind of know, but let's go check on Moderna and Hims mRNA. Looks like a nice, somewhat of a nice setup. You have previous lows there. Whoops. You have previous lows, previous low. You broke. You got above it, failed, rejected, got up above. Monday, it rejected, but it quickly reversed, held it. You're back below the 20-day moving average. Failed it again. You held it yesterday. You broke it today. Now you're rejecting it. So this whole area right here, maybe this would be the low. Let's say that's the low. But that area is an area to pay attention to in front of 54. Now that you're below the 20-day, you know, you get a decent move. There's no reason why you shouldn't be able to get 52. What is that, 4%? Yeah, 5%, 4.8%. If you can get that down into $50. So that's a pretty nice move. If you get in here and you're able to ride this thing right into there, you got about 4.5%. Think the SPY is going to give you 4.5% today? I doubt it. I doubt it. Probabilities on that one aren't looking too hot. So let's go look at. So I traded Palantir yesterday. I didn't like how it was acting towards the end of the day, and looks like it's trying to give you the move. So let's go look at the 150 calls. Damn. So they're the put 150 puts. So they're not up at all hardly. I sold them yesterday for $1.30. They're at $1.40, $1.39, $1.36. That's your theta. That's the time factor happening there too. But anyway, let's go trending. What do we have? What do we have? What do we have? What do we have? Wait, what was that? I didn't get that. All right. All right. Damn, that doesn't look good. It says 1080. I don't know why it looks like that. So your guys is at least that could be my monitor. So USO breaking out to new highs on volume. Look at the volume here. She's getting a bit squeezy. Let's see if you get any pullbacks. It should start to pull back here. You should start to get a pullback. But anything goes once you get, if you have a short squeeze, it can just do whatever it wants. You can see the volume's getting a little bit thicker there on the sell side. So I would look for a pullback into 121. This, excuse me, 121 could give you a nice opportunity. I still think you should have no issue getting back and up to 125. So if we get any pullbacks, I wouldn't mind trying for it, but it's just an ugly chart, right? Because if you look at this, you're like, okay, where's my pullback zone, right? Where did you put in some resistance and all that fun shit? It's all the way down here at 119. So it's not really. I mean, I guess you could say, you have this pivot high here, but you have all this open space. But if it's going to climb, 122 is the entry zone, and it should start to. That's what it's doing now. It should start to go, which it's doing. But at the same motion, look at this, right? You're putting in new highs, non-confirming new highs, right? And you have a very mean-looking wedge as well here, right? And these are technically majority of the time reversal patterns. Ascending wedges, descending wedges, they're usually reversal setups, but I don't know if you guys saw that or not, but look how clear as day that is. So see, what do we have here? So 30-year. Let's start with yields. 30-year. All right, 30-year. QQQ trying to bounce back. It should if you can get the USO to pull in, or oil, CL, crude, whatever to start pulling. Let's see, Walmart's selling off, of course. Of course it is. Of course it is. So that's going into support. Let's look at SWR. Gotta pull up Bitcoin. Just want to go through a few of these names real quick. Did this just recently IPO or something? IPO debut. I'm going to let you guys know right now, this is a stock I am going to buy and own, and it just randomly came to my mind after for whatever reason, after I put in that ticker. All right, this IPO'd not too long ago, and let's see here. Let me Google this. When is the lockup period over with for? So I do want to buy some of these. I'm going to tell you guys right now. So this IPO'd on the 17th of December 2025. Approximately June 15th through June 17th It's the lockup expiration. Okay, it has a 180-day lockup period. So maybe it's better to buy it right now, going into the thing. Let them sell it off and pick up more. I wish I could find out. Oh, they just recently completed a secondary offering as announced in March 2026, but the initial one. Wait. What fucking dirtbags, bro? These guys shouldn't be doing this. They don't need the money that what? So I mean, I get like, bro, they're not like they're literally just abusing. They're not abusing the market, but that's not shareholder value in mind. When you say, "Hey, let's dilute our shares to open up a new place in Texas," when we already have the money to be, and we've been doing these things in the past. Why the fuck would why would you dilute shareholder value? Like that, I don't like that. I don't like that. That shit right there, just for a new warehouse, and that should that's nothing. To expand national network of 54, 45. Okay, 45 is different. Wait, hold on. Expand national network of 45 across the U.S. by constructing new 1.2 million square foot distribution center. Groundbreaking its first operational initiatives as a publicly traded company. Northfield. Let me go pull up NVIDIA real quick. They announced during a groundbreaking event this week that it plans to expand its national network of 45 centers across the U.S. by constructing a new 1.2 million square foot featuring Texas. Fully operational in Q2 of 2027 and is the first new DC announced. Let's see. Sorry, I'm reading this real quick. It will serve healthcare providers across the continuum of care in the area, including hospitals, ambulatory surgery centers, physician offices, and nursing homes and hospices. Okay. I don't understand it. I don't like that. I'm gonna be honest with you. Why? It doesn't make any sense to me. I don't work there, so it's just weird if you ask me. Like, why would you decide to dilute your equity when I know that this company has the money that they need already? Maybe they had to do it because they spent so much becoming public. I don't know. I would imagine going public probably costs just as much, if not more, than that new building that they want to make. I could see it because putting in a building pad, throwing up some concrete walls, and getting the racks and everything. You're pretty much just building a building pad, getting the ground strong enough, pouring a big ass concrete pad, hanging up some walls. Obviously, you got to run some water line and all that stuff, and you're parking and running storm. But still, like, to become public, I'm sure has been a loop between lawyers, all the filings, right? All that stuff adds up. So I would say it's probably roughly around about the same amount of money. Maybe that's why they had to do it. I don't know. You know, but we could. I wonder if Google can tell us that. How much did they spend going public? Let me see here. Let's see. Let me close this. Close the panel. Yes. Much bid. Look at NVIDIA go. NVIDIA's ripping, guys. Or it's back to the upside. All right, so there we go. We're right back up there at 153. So it raised 6.26 billion in its December 2025 initial public offering, making it the largest US IPO of the year and the largest private equity backed IPO of the year. Oh no, ever. And is the largest private equity backed IPO ever. The company sold 216 million shares at $29 each, achieving a valuation of over 50 billion. Amount raised, they raised 6.26. The valuation over 50 billion, initially 38 billion in some reports. Shares sold 216 million, upsized from 179 at $29. Proceeds are designated to repay debt. The company, backed by private equity firm Blackstone, Carlyle, and Hellman and Friedman, had previously been acquired for $34 billion in 2021. Wow. So that's what I mean. If they raise all this money on top of that, okay. So NVIDIA back on the run, back to the upside here. So you're getting a bit of an outperformance here. QQQ is heading back to the upside, pretty much back to where we opened. So the market's not really moving. It's really not. Okay, so I gotta figure out. I gotta see what's going on here. I need to get some ideas. All right, so let's go. Just for proof, guys, that you guys don't need any money. Like to spend on stuff to find things and do things, right? So just use the access at your hand, and that is the internet, right? So we have this. Oh man, who is this? I mean, she's. Crypto is now said. Let's go check in on crypto. Let's actually do that since Bloomberg is talking about it. Shit. Let's go look at Bitcoin futures. See what they're doing. So they're down. So you did get that rejection off of 75,000 the past 2 days. Yesterday, Monday into Tuesday, you got up there, and now you're starting to reject. They're selling off today big time. So maybe that's where we need to start looking. Look at those NVIDIA calls or puts now. They're only $1. Dude, they're getting enticing. They really are. NVIDIA is ripping. Let me log out and log back in. I got a lot of names read today. A lot of names read. Damn. Dude, Nike's just getting its ass whooped, bro. Holy cow. But that's okay. Bro, like, that's not good. That's not good. It's all good. I don't care. I don't care about looking. Like, it doesn't make me feel any type of way in the long term, but, like, look at this. I was up like 20-some% on this, and now it's taking it all back. Wild. Wild. Could be a Head and Shoulders. Anyway, so we were talking about Bitcoin. Let's go look at Coinbase. Here,
VLT, Neil called this one out. He's absolutely right. It had a monster move yesterday, and then in another monster move in the aftermarket right around 5:15. It got all sorts of volume. In fact, the volume in the aftermarket exceeded the highs of the actual regular trading hours. We were doing a bunch, 2.5 million.
So I'm not the only one here. Where, they're not. I'm not missing out on anything. I can already tell. All right. Gotta go check out. I don't mean to keep going back and forth, guys, but NVIDIA's down there. Let me just put it right here. Just, it's surprising she held on to that. She held on to that level. Got to give it to her. When I was looking at it this morning, I'm like, man, it had non-confirmation on the new lows. And then the volume wasn't matching up, to the side that I wanted, to the side of the trade that I would have liked to have taken. So looks like our next target's going to be 185. Maybe if we look for pullbacks here, as long as things stay the same, I'm going to be honest, you guys, I wouldn't be opposed to a 182.50, 182.45 long. See if we can't target 185. I mean, that's a 182.345. That's a $3 move, That's if we can get back up to 185. I think that's your resistance zone. I think that's where she's headed. Excuse me. Let's pull up a 5-minute chart. Show you guys here. See, you have the 20-day right there as well. But to me, I think that's You know what? 183.50. That would be Monday. Today's Wednesday, so that would be Monday. So look, check this out, guys, right? If we do this, look at this. Right, look at this. Previous lows from Monday. You got up there, support, 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 right? You broke it and then you rejected it. And then look at Tuesday. You opened up above it, right? And it sold off right to it. And at what level I'm talking about is right here, right? Right here. Right there. Let me make it a line. Okay? And then yesterday, you rejected it yesterday. You came in with a big gap up. It sold right off to it, held it, bink. You bounced off of it, rejected, and it broke. And then rejected, rose up there, yesterday after hours. You quickly got above it. And what happened? Once again today, you failed to hold it. So it's just my opinion. But if this level here starts to hold at, come on. This level at like, what is this, 183? What is this? 182.50. I'll say it again. 182.50. 182.50 to 185 looks to be the trade. As long as you can hold it. 182.50 should be the long. I know you guys probably don't see it on here, but let me see if it's on here. Listen, Bitcoin has given us the moves, to be honest with you. Bitcoin is just selling off, and it's really giving you follow through. So you're already back down in the 71,000. It's just very low volume. I'm going to hold off on Bitcoin because I would need to see Bitcoin. Let me do this so you guys can see what I'm talking about. I would need it to bounce back. Look how low that volume is, guys. It's giving you all this follow through, but it's like, that's weird. There's not hardly any selling pressure. So let's see if you get these previous highs. You turned it into support here. Let's see what happens if you can get a bounce back. I'd look for bounce back rejections. Since I've already missed the moves, so I'll look for any bounce backs. And if you can get a bounce back and, maybe 70, I don't know. I just think the chart's so ugly. I do. I think it's just an ugly chart. Like the daily chart here doesn't look too bad, but you see what I mean? Like you got support at 70,000. I don't know. Just these charts are ugly, man. I don't understand. Like it's just a time period that you have to accept, and have some support down here. Yeah, 72. You give me 72, I'm in this trade. I'll think about it. Bounce backs to 72. Other than that, I don't care. I'm not even looking at it. QQQ, Monday's high. You're retesting it roughly. You're bouncing back into that zone. All right, that zone's going to be 602. 601.90, 602. that selling pressure is still coming in. All right, here's NVIDIA right at 102.50. That's what I wanted to do. I wanted to see it on this. So 182, 182. Depends on what charts you look at, but 182 looks like a hell of a zone for support on NVIDIA. There you are, 182.50. Probably breaks. going on here? Yeah, I'm still seeing 102.50 as like the it's like the zone. It's so weird. Here you are, you're at it right now. I don't know, man. Today's just gonna be it's just gonna be a slow week. I have to accept it. Everything is red for the most part, other than semiconductors. All right. And to think about that, you're already up about 30% on NVIDIA and it hasn't even moved yet. Like it hasn't really given you the move. I got to go through this and redo these charts. Let me get rid of this. I have 183, 183.50. Unreal. Sorry for a boring stream here, but it is what it is. Sometimes you're just at the mercy of the market. Let me see here. Let me go here. Get rid of that.
BATL.
KODK. KODK.
BLND.
KODK.
AIM.
KODK.
Apps. BATL. ANDG. Big spread.
CBRE being mentioned as a newsletter pick.
AHRT.
CGTL. AIM.
WBI. WBI.
AIM.
NN.
CGTL.
KODK. KODK. AVU. KODK.
KODK Kodak continued to make new highs, up 6.5% now.
WBI. WBI.
CGTL.
WBI.
LNKS. BZFD.
AVU. NN. AVU.
AIM. ARTL.
And if anybody has questions or anything, I know I'm just
Avu.
being
JBA.
a little quiet right now, but
BZFD.
you know, it's kind of just a boring time period. I'm trying to
LNKS.
figure out what it is.
JBA.
Like, where am I supposed to be in the market? So that's what I'm looking for right now. Right? Am I missing anything? I went over some of the earnings. Right? We talked about. We had names like Delta Airlines yesterday had some news.
AVU.
JBA.
AVU.
BATL.
Still just sitting right there at the
ARTL.
same level from yesterday, so that's not one. You know, let's see. Medline
ARTL.
mRNA was moving. Okay, that's
AHRT.
below its 20-day moving average. Thursday, Friday lows, or Friday,
AIM.
Monday lows. It broke
AC.
below it, recovered it. You have the 20-day moving average
AC.
right there.
AC. AC.
Let me look at like Tesla and a few other names. All right, so you may be able to, you see resistance, resistance,
AC.
resistance, resistance, support, support, breaks, support, 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 support,
AC.
support, 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 support. Holy cow, has that been support? It should break.
Musa. Watch the spread.
After all that, like you've done all that and you haven't gone
ARTL.
anywhere. See if you can't get this thing to pull in. Anyway, that's a trade idea. HIMS. Okay, that was in the news a little while ago. Okay, you broke above the 50-day
OEC.
moving average. You've pulled in. Now you're just sitting right
Musa.
above it.
Watch
You
the
have a
spread.
bit of resistance up here at $25. You get up above that and you break and hold. You could start to extend fairly nicely back to 28. Let me go through. Hold on, there was something there.
ALDX.
So I'm going to go back to NVIDIA. I'm just going to delete the things that I have up. Because it's getting to be a little crowded here.
QCLS.
Agro. 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 DTIL.
This is crazy.
QCLS. ARTL.
AVGO. Not really doing much either. Just hanging out below
AIM.
its 200-day moving average. Monday's low.
IBRX.
DTIL.
TLYS.
All right, I'm just gonna turn
AIM.
something off for noise, and I will. Damn, that's crazy. $1.14 now. That's wild. So I am glad that I sold mine. I can double check that I was in the
AIM.
150s. I'm pretty certain I was. Yeah, 150 puts for March 20th. Yeah, I'm glad I got rid of those. It wasn't sitting right with me.
AIM. QCLS.
If you guys have any questions, again, feel free to throw them in the chat.
NN.
I'm just going to go through a list of
QCLS.
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 Try to get ready for
QCLS.
this
QCLS.
QCLS.
Throw in some
QCLS price stabilizing.
TYGO.
QCLS.
QCLS.
QCLS trying.
Xanadu has announced negotiations of up to $390 million.
If this works.
Welcome to Maryland, home to some of the brightest.
Dude, my shit is tweaking out, bro.
Billions of dollars a grant. Nuclear. It's a pretty cool space to be in.
We should visit.
Yeah, well, we've got you.
Constructs. David, I really appreciate you taking. Regardless if people agree or disagree with you, it's important to hear, other thoughts than everything is rosy. So let's start big picture. You want to give us your kind of bird's eye view of how you assess things here with this AI spending and the boom?
Yeah. Hey, thanks, Alex. Look, we're not trying to like spread fear or rumors. I mean, we're just going the extra mile and looking in the footnotes. And when we do, we see another $500 billion in off-balance sheet debt that represents more spending and more negative cash flow than what the market thinks. Oracle was the first canary in the coal mine. We've since discovered around $248 billion in off-balance sheet debt. So they have the most off-balance sheet debt. And by the way, if you look at operating cash flow in the cash flow statement, it was a positive $17 billion over the last 9 months and from the last quarter, where when we look at the trailing 12 months free cash flow, it's a negative $200 billion. So there's a big swing there. And these swings are very important. We actually just published a piece, was a very popular piece on residual value guarantees that Meta is reporting. And this is yet another way to hide debt off balance sheet. People don't realize that these guarantees, these not yet commenced leases, these are not really optional. Because in the race to win the AI game, these companies have to commit this kind of capital to keep up. So if they choose not to commence these leases or these guarantees don't necessarily have to get forced, that means they're giving up and they're quitting, which is what we just saw recently when Oracle decided to walk away from a major data center.
Yeah, and so, David, I really appreciate this perspective and the work that you and your team are doing as you're getting deep into these deals. You're seeing kind of the messiness of some of them, I guess, to put it lightly. I got a question for you I'd love your thoughts on that's even just higher level thinking of, hey, these companies are spending tremendous amounts of money. They're not going to do this without hopes of somehow getting a return on that investment at some point in the future. To me, I don't see how there's any logical conclusion for there to be a return other than mass job displacement. And if that's the answer, who's going to buy these products if no one's working? How are they going to have any income? So that's where I've always kind of gotten this circular kind of confusion of, if what you want to happen happens, is that even good for these businesses?
Right. AI is sort of heads I win, tails you lose. Alex, I think it's a great question. I think, the first question that we need companies to answer is how will they, to your point, how will they earn an adequate amount of cash flow on the hundreds of billions, even trillions of dollars being deployed to build AI right now? And that's a great question, and no one has a good answer. And I got another one for you, Alex. I don't think the spending is about to end anytime soon. Not only is this super high rate of spending a way for the bigger winners in AI to force their weaker competitors out of business, which is what we're seeing with, I believe, Oracle and potentially Amazon and potentially Meta. But it's also only the first few innings, because what these AI firms won't say in the headlines, but if you get them behind closed doors, they will readily admit, is that despite all this AI infrastructure, this compute, this memory, these fancy models, they're still not very valuable because they don't have good data to drive them. Everyone's recycling the same internet data and expecting, because you put it into a bigger machine, it's going to provide a better answer. And that's just not going to work.
Even if we take an optimistic view here and we say, hey, there's not going to be massive job displacement, it's just going to drive tremendous productivity gains and create efficiency, much like maybe the internet or other things technologically have throughout time, isn't that going to send a massive deflationary shock at the least, just given the fact that you're going to be able to do things quicker, more efficiently, and perhaps cheaper at some point, even though it's expensive right now?
No, I think that's a great point, Alex. And my personal belief is that the majority of the value from AI is going to accrue to consumers and not big corporations. Right now we have this almost oligopoly of big corporations in America and the world, the Mag 7. They make a disproportionate amount of the money, and they have won a disproportionate amount of capital from the stock market. I think it's healthy for that to unwind. And I think that those folks have had sort of a monopoly on a bunch of individual consumer data. And they've been able to monetize that in a big way. I think AI is going to disintermediate a bunch of that and allow individuals to do more on their own without having to commit all of their data, knowing or unknowing, to the Borg, as I like to call it.
All right, David, final question for you. You guys, back in November, I believe it was on the 10th, you pointed out to Oracle. We've seen what's happened since. You mentioned Amazon, you mentioned Meta. Is there another area of the market that you raise your eyebrow at right now that drives some concern?
Not so much as concern as opportunity, because there are a couple of AI stocks that we pointed out last year that we said, hey, listen, a lot of these AI stocks are super expensive, but here are a couple that are really cheap. And those have, while, for example, Oracle's down about 37% since that November report when we called it out as a canary in the coal mine, these other stocks are up 50, 60%. So it's not all doom and gloom. The point is to have a sober perspective on where cash flows are strong and weak. And sometimes you got to go past the headlines to get that answer.
All right, final question. I lied. One more. Is this correction in Oracle, in your mind, enough to change the concern then? Or is there still further repricing that you think that needs to happen?
I think there's probably a lot more repricing that's going to happen. And I think that's part of sort of the disintermediation we're going to see of these huge amount of profits in a precious few companies really being spread away from the big companies and more value to consumers. So I think in general, we're due for a lot more downward movement, especially in the expensive stocks. And I think the value is going to shift to consumers, but then also to these inexpensive stocks I mentioned earlier.
David, I really appreciate it. Thank you so much. Great insight and great perspective. And time will tell ultimately where we go from here. David Traynor, the founder and CEO of New Constructs. Coming up next, we'll be joined by George Tillis as it's time for the Disruptors. And today, we're going to look at Micron ahead of earnings. So one of those AI names that's been surging, a stock that's trading at all-time highs as we speak. We'll be right back.
As if I'm not already ready. It's just, there's just nothing going on. Literally. Like, let me go through here and just see if we have. Goldman looks like it's moved somewhat okay. +3. You have -7. Oh, McDonald's, that some call it. MCD. All right, let's see. Let's take this back. So the ES, we're still hanging out at Monday's highs, Tuesday's lows. I think if this thing stops moving. We're right below the 200-day moving average. All right. Okay. You know what we could look for? Especially if we can get another dip on this. So look at this. If you see us, okay, and like let's just say the Qs, right, that I have up here for you guys. Let's say we do get down to like 598 for the bell, or not for the bell, but like by 12:30 going into like 1 o'clock, 1:30. I would look for that like 1 o'clock bounce back to get back to where we opened, back to where we closed, right in between, back in this 602 area. And that'd be 9, 10, 11, that's, I don't know why I said 9, but 1, 2, 3, 4, that's like 4 points. Could be a nice little trade there to be had going back to where we opened to start fresh with the Fed meeting. We do it a lot. So it doesn't mean it'll happen today, but it's highly likely that if we're down at like prior lows and we are just like, the point to this trade is like the fact that we're extended going into a Fed meeting, and I would like to see a bounce back to fill that extension. If we even get extended, we're not even moving. So right now, that's just out of the cards. It's not even happening. So maybe I'll just wait and talk about it if we get that. Ungroup. There we go. Let's go. Okay. So let's go ahead and look at McDonald's MCD. See what's going on here. Good old McDonald's. MAC Donald's. All right. 50-day moving average. Prior lows. What is going on here? Let's see if we have some news. Market watch. The spike in gas prices might affect Olive Garden sales. Oh, shit. So that's it. That's what we're trading off of. That's why this thing is down nearly 2% on the day. Garden Restaurants, Olive Garden. I don't see anything from McDonald's. Okay, right here. They found similarly results at McDonald's as lower income consumers have been stretched by higher prices and more of their wealthier counterparts, and at Texas Roadhouse. I own Texas Roadhouse. I don't own McDonald's. I should. I should have owned it a long time ago, but I don't. So what is this? Market Watch. The spike in gas prices might affect Olive Garden sales, but not in the way you'd expect. Olive Garden parent Darden Restaurants reports earnings this week amid concerns over rising oil and a strike at a large U.S. meat packaging plant. Oh, there's a strike. Okay. Darden Restaurants reports. They report on Thursday with Olive Garden, a parent to Darden Restaurants, and several retailers set to report earnings this week. Wall Street will be focused on the effects of rising oil and gas prices on consumers. Will we, or will we just be concerned on the earnings themselves? I would be concerned with the earnings and outlook. I don't care about gas prices. They will eventually fall. That's a fact. They could stick around for a long time, but, if demand starts to fall because they've been up for so long. Let's see. spying conflict in Iran, but one analyst says the impact, at least for restaurants, might not be what you think. BTIG's Peter Sala said that after looking at years of data on gas prices, same-store sales, and foot traffic, he found little evidence that higher gas prices kept people from going to restaurants. My point! That's what I was thinking too. I'm like, you know, like, it doesn't, it's not like gas prices make or break you. They definitely hurt you over time. But, so Celia said in a note Tuesday he was watching commodity inflation ahead of Darden's results. Recent spike, blah, blah. We believe too much emphasis has been placed on the correlation between rising gas prices and the impact of restaurant traffic. In our view, there may be psychological threshold when gas prices breach $4 or $5 a gallon in certain geographies, resulting in short-term consumer retrenchment. He added, however, that is anecdotal, as the data over the past 2 decades does not support the thesis that rising gas prices negatively impacts industrial traffic. According to the AAA, national average gas prices per gallon rose to $3.79 from $2.91. All right, cool. All right, so let's go to a daily chart. Let's start going over some names here. So there's no real news for this to be down. Okay, cool. Check this out. So we have a daily chart here. Look at this. Look at all that resistance. That's a break, a retest. Let me fix this really quickly. Sorry, guys. Let me just fix this. All right, we'll bounce this up so we can see it. That works. Okay. So this is a nice weekly, daily and weekly chart here. What I don't like is if we go through this, you can see we broke out, right? You broke out right here, and you pulled back into these prior highs. And then once you had that break, on that retest, that bounce off of the retest got taken back. Not only did it get taken back, you're getting the continuation right now, if that makes any sense. Right? So you break out of an area, you pulled in, and then when you bounce from that pull in, you're like, oh shit, overhead resistance, and then you just rolled over and you have not bounced back yet. So that's a little concerning. Not in the sense that if you want to own this name, maybe you get better prices. Maybe we can make enough money short if we get that opportunity to be able to go short, make money on the short, and use that money to buy the shares. It's called a double plus, right? We use our money to make money, and then we use the money that we made to put it back in, so we have free shares. If we get the move, if we can get it. That's really how you excel your net worth, in my opinion. What I've seen and learned over the years, and what I've learned is capable of this is, I'm telling you, man, the market's, I don't know, it can be life changing, really can, if you use it correctly. All right, so I'm on Wall Street Bets talking about McDonald's. I'm just going through and seeing what people are talking about. Let's see here. So what do we have here? New. All right, so we have new. Okay. Dubai influencers in shambles. What do we have here? Let's go check out Wall Street Bets. So McDonald's is still, hold on 1 second, guys. Hold on 1 second. Dude, this thing is still breaking. So it's breaking below this level at 320, 319. I'm going to put This is crazy, bro. And it's on low volume, it looks like. Look how far this is extended. I wonder, is that a head and shoulders almost forming here? Wow, this is crazy. Wow, look at that 9 EMA. It's right there. Anyway. Really like the chart, but I would say if you get a bounce back in the 322, you might be able to get a. What is going on? I just find it hard to believe that this thing is down so much with no news. Your hourly chart is up there. But the problem is you have the 50-day moving average in your way. Yeah, I'd be looking at 322. All right, I'm going to move on from McDonald's. All right, I'm going to move on from this. Costco is also down 9 points. Let's go look at COST. Another chart that just doesn't look very well. All right, so you are at support. Let me see the 4-hour. Damn, a lot of your dividend names are getting smacked. BTI, Philip Morris, MO, right? And then Walmart, Costco, Procter Gamble, Pinduoduo. That's also getting smoked. Do I have that on here? I do not. SPX is down 35 points. Look at Rocket Labs, RK. We already talked about this, though. Damn, Merck, AbbVie. Just everything, man. This is crazy. Newmont. A lot of things are turning red. Funny enough, here comes 12 o'clock, and you're starting to get some volume bouncing back into where we opened and where we closed. Let me see if I can fix this. It's getting me a little tired. Let's see what happens there. All right. Look at Rocket Labs. Oh, it's already broke that level, so that's not cool. Set priorities high, whatever. All right, it's almost 12 o'clock. We'll turn on some CNBC. I'm just gonna start at, mega cap tech names. Like I don't know what to do, guys, because there's just, in my opinion, there hasn't been like, look at this. Look at NVIDIA. It's just sitting here. Right? It's just sitting here. It's not doing anything for me. So I'm glad I did not take that trade. 20. If for whatever reason, if we do get a sell off and you see that we break this level here at 182, I want to I'm going to be taking the 180 puts for this week on Friday. Not tomorrow, but Friday. Once again, that 9 EMA, you're struggling. It cannot hold it. So I don't know if you're going to run a test back to 184 and make a run at that 20-day moving average right here. I don't know. Hold on, let me just do this. I'm just honestly tired of looking at these charts and stuff because it just doesn't, it's things are just a joke right now for whatever reason. All right, so here's our 20-day moving average up there at 184.50. Right. Gold, stocks, trending. I mean, in reality, if we take a look at this, you are rejecting that pre-market low there. Technically on the hourly time frame, that's a break and retest of 183. But if it doesn't reject it and it just like stays there, it's not really a rejection, is it? It's more like, oh, we just bounced back to it and stopped moving. So that means sellers are not stepping in a way that we want. Apple, Tesla. Let's go look at Tesla. So Wall Street bets really quickly. Let's see here. Where is it? Daily discussion. Daily discussion. Okay, so there's nothing really there. There's nothing really useful there. Let me make sure I had the scanner up so I can see what's going on. Bro, come on. Stuff pisses me off. Okay, so Microsoft, look at this weekly chart. All right, we're looking at the weekly chart here. You know, it's not looking good. You know, you had this bounce, a little bit of support, and it's just the selling pressure is it's putting it on it. So if we start getting down into that like mid like 350, 370, I'll buy some more. My opinion, I think this market is just going to take its time just going lower. It could be another year and a half left. You know, it could be up until the final year of this administration, right? I think you see a lot of chewing of the clock. So that's why I haven't really dug in and bought any more of these names as much as I'd like to. I'm just being patient because I think we could get a little bit lower. I think we could get some more lower prices. If we don't, we don't. It is what it is. That's, you know, something I'll have to live with. But let's go look at Lululemon. They had earnings, so they have a reason to move. There was a lot of names on the board yesterday. Felt like look, Tesla is not moving. Not moving at all. Just sitting there. Delta Airlines was in the news. Got above its 20-day. It's pulling in, trying to hold the 20-day moving average. This is 60. You got a little bit of resistance here. You got this pivot low, but it's nothing crazy. Let's go look at CrowdStrike. Reddit, you have a nice little double bottom here on the 20-day moving average. Look at this, guys. Check this out. Check that out, okay? Here comes the part where you start getting tired because nothing's going on, but we have a Fed meeting in just a few hours. Oh shit, sale point. I own that. They reported this morning. Oh, awful. So this is a small position. I bought it because JP Morgan said that they were giving it an upgrade and thought it could be a good stock in the future. I don't know. We'll see what happens. I was checking everything out. They don't do too bad. Like, look at this. Their EPS is increasing. It's not falling. It's positive. It's also not negative. I don't know, man. I might just end the live stream because there's just not much going on aside from the Fed meeting. Maybe things pick up. Hopefully they pick up. Would this be Jerome Powell's last Fed meeting? I'm pretty sure, right? If he's steps down or aside.
Because if you're
You have to understand that for the next couple of weeks, things may feel really lousy, and you may end up kicking yourself if you buy today saying, why didn't I wait a couple of days? But again, the short answer is yes, there are compelling values here. I have to just address that my answer is given in the context of the belief that this is a one-month campaign. Now, I don't know that to be the case. Nobody knows that to be the case. But if this is a one-month campaign, and I would like to think we'll get a clearing event the way Bryn puts it, but I don't think we will. I think we'll get a slow fizzle into some sort of normality where you start to see a slow pickup in tanker traffic through the Straits of Hormuz. I don't think there's going to be a signing of the Treaty of Versailles, so to speak. And in that context, one has to be aware that buying today may feel lousy tomorrow, but a year from now, or maybe not even a year from now, maybe the same way we looked back on Liberation Day. Not the same event, but you know, if you looked 3 months back on that opportunity, it was definitely a buying opportunity.
Yeah, I mean, who knows? In retrospect, maybe good. We're not going to get a Treaty of Versailles. It didn't really play out the way we hoped after that.
I knew that might not be the right reference, but I meant as a point in time.
Yeah, John Maynard Keynes has something to say about that. Let's bring in CNBC senior economics reporter Steve Leisman, knows all about that. Ahead of the Fed, Steve, and of course the Fed is looking at a lot of the same issues and influences that we're trying to hash out, and perhaps doesn't have a clear answer of how it might proceed.
Yeah, I'm not sure it has any more insight than anybody around that table there, maybe even less. I think there's three forms of communications that happened today. There's the statement, there's the forecast, and there is the press conference. And I think the surge in the price of oil will have an effect on all three. It's likely that you're going to get some commentary in the statement about geopolitical uncertainty, as well as some change in the forecast. And what we're looking for here, Mike, is the extent to which the dots signal one or possibly no cuts in 2026. You can see what's happened to the probabilities. They cratered this morning in part hotter than expected wholesale price report, in addition to oil ticking up closer to the 99 level than it was this morning, around $94. And Mike, I like your framing of this 4-week window, which we talked yesterday to John Kilduff, and he talked about this idea that if this strait is not open by April 1, there's another level or another leg up that's going to happen to oil prices that will be much more meaningful than it's been so far.
Hey, Steve, it's Joe. Good to see you. So the market has been troubled so far in 2026 by much more than, obviously, the challenges related to the Mideast conflict. And one of those trouble spots has been software and private credit. Any chance I get some comfort in this press conference where the chairman can convey to us that he is at least communicating with Wall Street lenders, and they are on top of gaining an understanding of what the real valuation of these private loans actually might be to the software industry?
I was with you all the way to the end. I don't think the Fed goes quite that far. Joe, I think you have to appreciate that the interests of the Fed and the interests of investors are somewhat. The Fed wants to know if what's happening in private credit, and especially with software, is something that's going to infect the money center banks for which they're in charge, and create systemic risk that will prompt them or force them to have some kind of reaction, either in the markets or in policy. And I think what they're generally have said about this is investors in private credit are free to lose as much money as they possibly want or make as much money as they possibly want. What they're not going to be free to do is to create some sort of big reaction in the banking system. And what I think he'll say, and what he has said before, is that they're looking at this and look at the connections to the banking system. But I don't think you're going to get any sense about what the valuations are, whether or not the marks are right, which is the big question for investors right now.
All right, so I'll correct my statement there, and 100% I agree with how you eloquently explained that. But at least can we get a degree of comfort that the communication channels are open and they understand right now that there are questions surrounding a lot of these Wall Street lenders, and maybe a degree of clarity is needed?
I think that's something that is definitely something that the Fed chair has said and will say again, that it's something they're looking at. It's on their radar screen. I think there was a lesson they learned from SVB, which is don't let those sort of things go unnoticed and take them very seriously when they happen. And I think also, Joe, coming from the great financial crisis, it's something that they're very aware of, this idea that there can be things that look like they're remote from the banking system, but end up being connected in ways they haven't figured out before. I think one of the questions you have is, well, what are the letters of credit of some of these private credit vehicles to the banks? And if they hit a liquidity crunch, can they draw on those lines of credit? And does that all of a sudden create this kind of danger inside the banking system from private credit?
Yeah. One of many topics we're going to have to cycle through in that press conference. Steve, you'll be there. You got to get going. I appreciate it this morning. Jim, everybody can kind of seize on their favorite example from history of how monetary policy interacts with a high oil price or some kind of an energy shock and the inflationary threat. So the 70s, everyone knows, didn't get control of it. There was easing into this shock. But you go to 1990, I've seen a lot of work there. The Fed was slow to ease, even though jobs were weakening and we got the oil price shock in the first Iraq War, in part because of the inflationary threat. 08, Fed went on hold for 6 months after Bear Stearns, right? And so 2011, the ECB hikes into it, and that was a mistake. And then, of course, 22, you didn't want to let it go. And the Fed didn't get ahead of it when commodity and other prices started going up. So maybe that's not really a roadmap. So what do we want from the Fed today?
Yeah. Well, how about if I answer the corollary of what do we not want?
Yeah, sure.
I don't want to hear any more talk about rate hikes. We had some talk about that at the last meeting.
Hikes.
Now, okay, I know this is a very small probability of rate hikes this year, but the problem for me intellectually is I can't take it off the table, Mike. So when you were setting up that question, I was thinking, man, he's reading my mind. It would be, in my opinion, a policy mistake to raise rates in response to an oil price shock. But the problem is we can't rule it out because we do have some hawks on the committee. And also, look at PPI today and look at other inflation indicators.
Yeah.
We don't have inflation under control, and we've kind of got a hot economy. So, I mean, that's what's kind of keeping me up at night. Is there a possibility that we not only back out the rate cuts to late 2021, we were still talking about,
it could be
we're
worse.
not thinking about whatever the expression was, rate hikes, and then we were.
That's true, although, Bryn, we came into this phase, before the Iran situation flared up, with the Fed already kind of on hold. Both the jobs situation as well as inflation were not quite at their target, but they also weren't emergencies to respond to.
So, real quick, I just went and got some water, did a couple push-ups. Trying not to get lulled from this market. There's just nothing going on, guys. And the only reason I'm here is because of the FOMC meeting, okay? It's the only reason I'm still here. The markets are not moving. So, here's the QQQ, guys. Just, we're not doing anything. You sold off pre-market, and you're still there. So I'm going to keep my eyes on Monday's high, Tuesday's low. All right. So if you don't know, today's Wednesday, right here. Tuesday, pivot low. Monday, high. I know some of you guys out there, I'm not, I don't judge, but I'm just saying, if you're struggling to know what I was referring to, you couldn't remember the day. I know how some of y'all get. Let's see here. 602. 602 is going to be that zone. We are also getting summary of economic projections. I wonder what I could do is I could go through the summary of economic projections if you guys want. We could look back at let's see, today is March. We could go see what their year-end target was last year and how those meet up till today. I'm pretty sure it was just the very low end was like mid to high twos, practically 3%. They'd be comfortable with 2028 being at 3%, 3.75%, or 2.75%. Let me see if I still have. It's crazy because I literally just deleted pictures of Bloomberg of the dot plot. Wait, let me see if I can do this. Give me 1 second.
in memory at that point, and you had underlying inflation that was way short of the target, not above the target. So, you can say it's analogous on some level. Certainly, that's a nominal price chart right there in terms of WTI crude. In real terms, it's way lower right now, and in theory should be less of a drag on growth. But I just think it's going to be interesting to see how Fed, how Powell and the committee frames it, how it all translates into, the dot plot. I still think that they're coming from a place of thinking rates are above neutral.
Right.
And therefore, you're looking for the opportunity to get them down toward neutral. But, we'll see if that thinking has been revised. Do want to switch over a little bit to some credit-sensitive parts of this market. We mentioned a little bit the alternatives, but I think the banks themselves are pretty conspicuous. They can't really sustain a lot of a rally here, and I just wonder if that's just, general unease with the outlook. Jim, I don't know if you're looking at individual ones and how they're acting, or if it's just kind of a more or less a malaise around growth in the yield curve.
Well, let me start with the curious answer to your question, which is, we all look at what we own first and foremost. So today I'm seeing that both Citi and Apollo are up. That sort of catches my attention on a day that's kind of negative, and they were up yesterday. Now, no question, there's been a little bit of malaise. There's been a malaise in the financials. I'm having a hard time saying that this is a real fundamental credit or economic growth problem. The reason I'm having a hard time saying that is because they were gangbusters last year, the financials. It is okay if in the first quarter of 2026, they take a pause, take a consolidation. Now, somebody may be yelling at the TV screen right now, hey, they're down. Okay, they're down year to date. 2025 was really, really good for these stocks. So just to be clear, Mike, where I am is this is a consolidation pause. It doesn't feel good. We've been talking a lot about the private credit worries. I think I've been consistent in saying that while there is some fraud, there are some underwriting problems. I don't see a systemic credit problem. And in that environment, I think it's just a matter of time before the financials start gaining their pace again.
Brian, I was going to just say, I know you think that, in general, things have been overdone in this area. B of A was out today saying it's an opportunity to buy, for example, Ares. Apollo was also reiterated as an overweight at Piper Sandler. So it seems as if people are trying to figure out whether the companies that run these strategies have been unduly punished. We can make our assumptions about what it means for asset gathering in the future. But the stocks so far over a couple of days are responding.
Yeah, absolutely. And I think, when you go back to last year, this all really started with First Brands and Tricolor, which by the way, really was not a private credit. It was JP Morgan, Barclays, et cetera, are the ones, Jeffrey, that had exposure, not the private credit. I believe Apollo was short some of that debt. And so I do think that ultimately this will play itself out. The firms on the private credit side that did good underwriting, of course, there's going to be losses. There's losses in investment grade credit. But the firms that did good underwriting, I think this will pass. We saw back in COVID, the BDC specifically, I think got close to 30% down. And then, they did not have a lot of defaults. And then a year and a half later, they were at a premium to NAV. I do just want to say, Mike, one thing that I think continues to get conflated, where people are saying this is the 2007 CDO or 2008. The banks are part of the fractional reserve system, right? So they take our $1 million in the bank account, lend out 900 and only have 100 on hand. Private credit actually keeps the loans. And so I think it's a very, very different narrative today. And so that's where I feel confident in what we own, because I do think it goes down to good underwriting. If you're a good manager, they're going to get through whatever software, et cetera, just like they did in 2020 and 2022.
Right. So it's certainly it's not the same transmission mechanism, Joe. Although I guess you want to keep an eye on how it is, if at all, influencing credit spreads broadly speaking. Yeah. There was a deal for Qualtrics, a bond deal. Bloomberg reported was pulled yesterday. It was an effort to refinance some private LBO debt.
Yeah, I think you have a lot of things to kind of give consideration to, especially on the fundamental side. What's interesting is the big banks reported really, really good earnings. And there was a very muted response to that. I think what's favorable about the financial sector relative to some other sectors like energy, we suggest, okay, you want to make sure you increase your exposure to energy. Well, it's a very small weighting in the S&P. Yeah. You have 76 financial names. out of 500 in the S&P 500. Jimmy, real quick on the math, that's about 15%, right? Ownership. So there are places you can go to rotate as a portfolio manager, and what I'm seeing within the financial sector right now is you're seeing a rotation that's available to you. You can go to the exchanges. You could own CME, you could own ICE, you could own Interactive Brokers. You could actually go back to the insurance companies that took a pause.
ICE and the exchange companies that AI is going to kill, supposedly, because of the index business?
But they're trading well. Or you could go back to the insurance companies that took the pause in 25 when everyone said, okay, let's own private credit and own the big banks. So the names like Travelers and Allstate and Chubb, they're working well right now. So you can make that rotation within the sector because the availability is there.
Yeah, I mean, the stocks are there. I just would, as you use banks as a little bit of a weather vane for, how people are feeling risk appetite-wise in macro, that's where I wonder if it's still something that has to prove itself.
And okay, maybe it does have to prove itself. That's a good way to put it, because what I would say is, like, this is a reasonable reason for banks to come down on concerns of how much they've lent to this sector. If you're positive on the sector, and I'm not like wildly over the top positive, but I'm simply saying I think the risks are being overstated, then this is the consolidation, the pause that actually sets up for the next leg higher. Of course, I could be wrong. There's real risks here. I don't want to be blowing off the real risks. But if you're bullish on the economy, if you think that private credit maybe has some underwriting problem, but not a systemic problem, then this is the pause that sets up for the next leg higher.
All right, well, coming up, the road ahead for Disney as a new CEO takes the reins. Stock is down 10% this year. Jim owns it, what he needs from the new leadership. Plus, we'll get you set up for Micron earnings after the bell. Halftime, back in 2 minutes.
All right. Okay. So let's see here. NVIDIA broke that support level, came back, reclaimed it. Now it's just hanging out above VWAP. 15-minute time frame. Check out 180. 182. All right, 182. It's going to be the level you want to look for, which would be yesterday's low, Monday's pivot low, and then below that you have a gap, which takes you down to 180. SMH. SMH, look at this. So you have your 50 and 20-day moving average all right up into here at 400. You have previous lows. Okay, previous lows. See, it didn't. Maybe I need to take all these levels. Like this level here, I don't need that. We're not there. Right, we're not there. It just looks really crowded. Can't explain it. Okay, so you have support. So you're back up. So you have this little support area. You have a resistance, support. What I'm looking at is here, these pivot highs and lows at 395. But anyway, if we're looking at this, you have the 50-day, the 20-day, all coming in right in there at 400. Psychological levels also at 400. Let's actually lower the time frame. Okay, let's lower this time frame. It's a little wide, right? You could really say that 405 to 400 is that zone, right? It was your support right here, and then you tried to hang on to it. You can see it was starting to give it up. Made one last attempt at it. You have the level, the moving average, the daily moving average, all right there. So far, you haven't been able to reclaim 400, 405. Not a clean chart. I think that's why things are slow. We have to wait for the next setup. So if we zoom in, okay, Friday's high, Monday's high, you consolidated above it. Tuesday got above it, failed, reclaimed it. Now we're above it, right? You reclaimed that Friday's high. Let me look at this. I don't know why the charts look like they do. They just don't look good. Maybe I'm alone in that, but like look at this. Like your resistance zone is this entire space up here. Right? It would be all up into there. That whole area. It's about a $5 wide zone. And I don't like that, right? I like when markets are trading off of technicals. So you know what? I wouldn't be surprised if you actually bounce, but you're negative. You're negative in a lot of areas that you'd want to be positive. So forget this chart. That's an ugly looking chart. Lockheed Martin reclaimed 640. Isn't that something? Let's check this out, because if this is going to go, guys, this has a lot of room. A lot of room. Technically, you have that pivot high, double top that you just pulled into it and you made it support. 640 to 660. You have another 20 points to the upside. So, something to maybe keep your eye on. You are below the 20-day, 90 MA. Just not having any luck with these chart setups that we have. Look how high. You actually went up to 790, so there could be a lot of room left on this. Could have been your shakeout. NVIDIA 182.70. All right, that's where we're at right now. So, pivot high, pivot high, pivot low, pivot low, pivot low. What I would do is I would wait and see if we get that 1 o'clock pullback. I would look for Lockheed Martin if you're interested in this. I would look for a pullback in the 640. Nope, not there. Yep, your hourly showing it now. Looks like it's doing it now. It's already trying. What is this? 318, 1920. What do they want for these? What do they want for the 650s? Let's see. Ain't no way in hell. Ain't no way in hell I'm paying $4 for a $10 move. You are crazy. I know this thing could do it, but not in 2 days. We're already halfway through today. So if it doesn't make sense, it won't make dollars. Don't force yourself into some of these names. We'll keep moving along here. We'll look at like Tesla, Palantir, Hood, Coinbase, AMD, AVGO. We'll just go through and look at some of these names. So, Apple. Okay, we're just hanging out. Apple's at a really nice possible support level that's coming up. Well, we'll find out if it's going to be support. So if we look here, you have these previous highs, bit of a head and shoulders here, or you could look at this as an inverse cup and handle, actually. So if I draw this out, let me get rid of all this stuff. Let's just get rid of everything. Just get rid of it all. Look at this, right? So there's the cup. You have your scoop right here. And the handle. Let me do this. Right here, it goes up. you had a high volume on that bounce, and now you have a nice wedge forming right into the support level right there. Okay, so previous highs. Let me look at I'm going to show you guys something. There's a really nice wedge here on Apple. Look at that wedge. Boom. Just doesn't look right. Just a lot of these charts are just ugly in my opinion. And I'm just trying to be respectful, but it is what it is. All right, here's this wedge. Boom. Right there. What I feel is a wedge. Maybe I'm drawing this out wrong. Maybe I'm drawing that out wrong, but so you're going right into that. Normally, like we talked about this morning, a lot of these setups, more than likely, are reversal patterns, right? They are trend reversals, but in this case, it is trying. It is trying. I'm going to get rid of this again. I know I shouldn't have just. So you have previous lows. Previous lows became previous highs. So if anything changes, I would look for Apple. I would look for these previous support areas. I mean, other than that, I got to be honest, I'm a little leery with some of these names like Apple and Microsoft because this is what I'm seeing. Like, they could take a long time to set up. But look at this. I'm going to show you guys something, okay? So here's your start. I'm pretty sure it's right here. Okay, here's the start. No, that's not it. That's not it. That's not it. I know I have it here somewhere. Just give me a second. Who knows? I had it before. I don't know where I had it at. Ow. Fuck my hand. There it is. Right there, guys. And that's from going back all the way back to the great financial crisis, okay? It goes right to the financial crisis. Pivot highs, pivot lows, pivot high, pivot low, pivot high, pivot low. And, doesn't mean, they can go 6, 7, 8, 10. They can keep going. But I just wouldn't be surprised if Apple, you know, I'll give you guys some more. Okay. Hello. I don't think this is it, but this is it right there. Pink. And look what you did. You double topped right at the end of that Fibonacci retracement. Right? And you've seen I didn't even have to play around with that one. All right. Now I did it there for a reason, because that was the new cycle, started the new cycle high. You had a really nice run coming out of the great financial crisis. That would have been roughly right around COVID. Right? That was your COVID low to the change. That was that, you know, so I mean, and we could do it like this, right? We could do it like this, and it probably still matches up. Here's the previous low. Right? We'll go there. There's your first pullback. That is a measured move right there. Look at that. And it still matches up right up there at 550. And that was from the low back in 2009. And I went all the way up to the first tariff tantrum, because that was the first pullback, was right here in 2019, like the first real pullback that thing had. So it all still matched up right there for Microsoft. Right? You guys want to see another one? It doesn't stop there, guys. Look at that right there. Bink. There's another one. And what happened to Blackstone since this? What happened? That's from the lows. You know? Doesn't mean it can't continue. But I wouldn't be surprised if you need to test $65 at this 100 zone. Wouldn't surprise me one bit. Again, nothing I'm saying here is 100%, you know, line in the sand. It is that. It has to be that, you know. I just think things need to take time to make new setups. There's a lot of them out there, you guys. There's a lot of them out there. The one I really like, Goog. I think you still have another run left in it. So any pullbacks from me into that 185, 250 zone, I want to take this thing into the low 500s. I'm hoping I can get that. You're seeing we're getting our first pullback where? Right at 349.58 or 84. Right at 350. Right at 350. It's not ironic. It's not that ironic, is it? So you can see that the moves, and notice how the moves are getting bigger as we're in this range, you know, as you're you know, getting into these zones here. Right? You can see it breakout, pullback, breakout, pullback, breakout, pullback, and it just like plays within the range and visits each one, support and resistance, and then nice tight price action. Literally, and like this is what also is crazy, right? Like look at the time from last year, because I bought about 10 shares of this on the tariff low. And it was frustrating watching it sell off, right? It would go up, sell off, go up, sell off. And then look up until where was it? It was like this 180, 179 mark where it just stopped doing the pullbacks, which is roughly right around that 100% mark. And it just started taking off. So if you look at like the Fibonacci retracement, it's just crazy how it also is lining up with the points on where it just really starts to take off and expand. You know, the moves get bigger and bigger at those zones in the time frame too. It's pretty freaking nuts. I'm telling you, it's crazy. So, that's that. So I'd like to be able to buy more Google. I'd love to be able to buy more, but right now it's a little bit overdone. Not overdone, but it's just a little. I can't buy more up there. I'm gonna wait for pullbacks or rips. Anyway, we're supposed to be looking at ideas for the Fed meeting, but does anyone have any recommendations as to any names they want to look at? Some of your oil names are just taking off. Let's go, Macy's. Look at this thing just trying to hang on.
days. If you're lengthening the lens now for me, that's going to create more of a challenge. And I think overall for the quality factor itself, those who are investing through that lens, it becomes a difficult environment.
And Brent, it will be very interesting as companies, if this goes into effect, tell us what they think their priorities are, whether they need to constantly promote themselves and talk to investors or not, or whether, you know, like Warren Buffett would say, don't give guidance, just let the performance stand for itself.
I think these companies are going to wait to hear input as they're taking feedback, the SEC, from all of the investors. But I do think the larger companies will continue to do this. I get it's a burden for smaller companies. I agree with everything Jim and Joe said. I think ultimately, though, I'm just curious, like, why are we even really wasting time talking? Not we on this panel, but why is the SEC wasting time on this right now? There's so many other regulatory burdens for small companies that want to IPO. It is not the quarterly reports that is preventing companies.
They're still not talking about anything either. These 150 puts that I had yesterday, they're still, you know. So I'm glad I made that decision. It's just not doing anything for you right now. We're not getting any moves really. All right, so here's Palantir. You're pulling into these previous highs and that 50-day moving average. It's a good sign right here. All right. Let me do this. is a major zone. 156 and 150. I'm not finding anything, man. I'm really not. Just everything just looks like garbage. There's just nothing really there, in my opinion. And I'm going to keep looking and looking and looking, but last week was a really nice. We had some really nice setups. And you also had some news catalysts that gave us a reason to move. So I'm trying to hang on and just keep the live stream on, but I'm running out of things to do, and I could just be doing things by myself if there's nobody here. And it just doesn't make sense. It doesn't make any sense to stream when check. All right, if it sounds awful, just let me know. And I'll fix it. I just spilt it. I just spilt the mic. Lululemon's getting a nice bounce. I was trying to do that, but sorry. Freaking amateur hour over here. So it's 1 o'clock. Man, I hope we get some volatility for this Fed meeting. I hope we get some volatility. I'm kind of nervous we don't really get much. I'm not going to lie to you. I'm a little nervous we may not get much. Because we kind of already know, unless they talk that talk like, yeah, well, guess what? We're not going to be doing much if we have to have a fear of inflation. And if we continue to bring on onslaught of inflation, it makes it harder on people. But in the same token, we want people to be able to handle the inflation. So we want to keep them working. We're just not going to do anything. We're going to keep our hands behind our back. We'll look for more data. Like looking at more data would be their excuse to just say, like, we want to buy time, you know, because they know inflation is a rate of change. Even if things stay high, it's not going to be that good for the economy. But, you know, I don't know. They're as we have seen over the course of a few years, these mother truckers are resilient as all hell, which is good. You know, I don't know. I hope we get something. I just hope we get something. Maybe Powell does go on a rant about, yeah, we're not going to play any games. We're going to, we will think about rate hikes. And maybe he says it and doesn't really mean it, you know? Is there a chance he could say it? Might be a chance. I don't know. Because he could technically say, well, technically, the labor market's still pretty, it's at relatively, historic levels that would be considered good, you know. So the labor market isn't the problem. Inflation's the problem. And if that's more of an issue, you saw him talk about the weighing, which one is the more important at the time. I think inflation would take the front stage for right now, but I don't think it gets too out of hand. I think it goes up a little bit, but I think you're going to see a slow in demand, and as soon as the prices try to go back up, which I think they are, from what I've seen, um, I think then you really start. We get another round of inflation. Then I really think you start to see consumers pick and choose what it is that they want to buy, and they're just like, "The hell with it. I'm done. I'm not buying shit that I don't need. I'm gonna pick and choose what it is. Maybe I got to downgrade. I think, so things are going to get interesting. I think things do get interesting. But the question is do we get volatility from the Fed meeting today? And part of me thinks that, I don't know, but I think that like in one hand, I think it could be like we get a little bit of volatility and then it just like dies. Like it's nothing. You get like 1, 2, maybe 3 moves, and then it just kind of just does nothing and stays flat. Um, but there's the other side of me that wouldn't put it past Powell to say, yeah, we need to keep an eye on this inflation. You know, the labor market again. I don't mean to repeat myself, but the labor market's pretty tight. It's been historically at good levels, great levels, historically good. Inflation is our issue, not the labor market right now. So if it does get worse, then yeah, he could. If he's asked a question, he could say, yeah, then interest rates they aren't exactly out, but they're not exactly in, right? We're not going to rule them out, but we're not, unless things get way overboard where we have to do something, then we will. Maybe he says something to the tone of that. So I'm kind of curious. Is this? Let's Google this. Let me see. Is this Powell's last Fed meeting? Is this it? If Powell doesn't go beyond his term expiration date, his last meeting as Fed chair would be April 28th. Oh yeah, March, April. I forgot we have April. So no, it's not his last one. We have one more to go. What a reversal out of Lululemon. This stock was in the gutter, guys. I wonder what happened here. Look at this. This thing was in the gutter. Look at that. 450, 500. And you're down a lot from there. Holds Lululemon. These analysts forecast neutral. My stomach. Oh, God, my stomach. Oh, look at that. Did they look at that EPS beat on Lululemon. Holy shit. $5. Wow. So Lululemon sees full year revenue at 11.3 to 11.5 billion. Oh, my stomach. That's so weird. Oh, it hurts so bad. It hurts so bad. Look at CrowdStrike. This thing is. That's the second time I almost spilled it. But you have CrowdStrike and Net. You have a lot of these security names. Really, trying to show up and show out today. I think the best setups, guys, is our S&Ps, Qs. I think these are giving us the best setups. If you want me to be honest with you, right? You have decent levels to go off of. 2 weeks ago, Thursday or Tuesday, Friday's lows. Last week you put in this big break, like you just bounced and you pulled in and you held Monday's low. Maybe I should bring this down in a little bit. Monday's high, you broke above it yesterday, pulled in, held it. I mean, technically, you came in with a gap down. We technically opened up red. So did that even does that even matter that happened? it was all for nothing. So what I'm going to do is I'm going to bring up the summary of economic projections, and I would like to see how they've changed so far. Let's listen in here.
See you guys later. Thanks for watching. Enjoy Tasty Live.
Oh, okay. Bye. We just stopped in, but I guess you're going.
The lead plane of each squadron, upon becoming airborne, proceeds for about 90 seconds. It banks sharply to indicate its turning point, then goes into a slow left turn. Each successive plane in the element turns as soon as the pilot sees the plane in front of him turn. The element of 3 planes levels off at 1,000 feet and returns parallel to the takeoff runway at a distance of about 2 miles. Here the elements start to assemble into squadrons of 6. Continuing to circle the field, the squadrons then go to 2,000 feet, where the group assembly takes place. This accomplished, the group now moves on to the combat wing assembly point. Here is how the group stacks up from the side. The group has a depth of 850 feet. This is how the group looks from above. In the lead squadron, the second element is flown with the nose of the leader slightly behind and to the right of the right-wing aircraft, first element. The lead plane of the high squadron flies even with the lead plane, second element, lead squadron. The second element of the high squadron flies with the leader's nose just behind and to the left of the left-wing aircraft, first element. Here is the group as an enemy fighter pilot sees it, from head on. The first element of the lead squadron is stacked high left and low right. The first element of the low squadron is stacked high right and low left. Likewise, the first element of the high squadron is stacked high right and low left. All second elements are flown low. The second element of the lead squadron is stacked high left and low right. The second elements of the high and low squadrons are stacked high right and low left. Experience has shown that this arrangement of the group brings to bear on attacking fighters the greatest possible amount of firepower by utilizing to fullest advantage the field of fire of each gun in the formation. Again, it is proved to be the most maneuverable formation from which to execute the primary and all-important purpose of the mission, the dropping of the bomb loads on a precise target. Obviously, it would be desirable to stack as many bombing planes as possible in one defensive formation. However, it has been found that the largest practical defensive formation is the combat wing of 3 groups. Any formation of aircraft larger than this becomes unwieldy. This force has a depth of 3,000 feet. The nose of the lead aircraft of the low group is aligned with the tail and slightly to the left of the rearmost aircraft of the lead element, lead squadron, lead group. The nose of the lead aircraft of the high group is aligned with the tail of the rearmost aircraft of the lead element, lead squadron, lead group. The combat wing having been assembled, they now move on to make rendezvous with the rest of the task force. In this case, another combat wing.
I'm gonna go use the bathroom, change my shirt real quick. Take my sweatshirt off, I should say. Look at this daily chart. Guys, look at this 680 here. This 680 on the ES looks beautiful. Right? As we came up, we rejected it. We would now be looking for 670. Right? Look at this. Boom. Support, 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 support. Broke it, regained it. Held, failed. We tried to get back above it, we failed. We tested it Tuesday, yesterday. Now we're below our 200-day moving average. This is the ES. I think you got to look for and write down on the ES 6,700 and below that 6,600. I think it's that easy. I think it's that technical. I think these levels are adding up as you guys can see. And I just put some
This plane from the force which is to attack Anklam is now approaching the Danish coast, and the formation is subject to enemy attack at any moment.
You can do this. You can be the first millennial to book a trip on their phone. How? Kayak. They compare hundreds of sites, so you know you're getting the right flight, hotel, or rental car.
Kayak. Got that right.
I haven't been to the grocery store in months because this delivery service offers hundreds of high-quality, non-GMO groceries and recipes that help me feel my best daily. Hungry is the easiest way to take all the stress and guesswork out of eating healthy. Think of it as having your own personal shopper and nutrition.
Some flight guns have opened up on us.
Enemy fires at 7 o'clock high.
ALU.
But it was now obvious to the British that they had to do something if they were to keep a toehold in the region. That winter, Britain launched what it hoped would be a knockout blow against the Italian Navy. On the evening of November the 11th, 21 Swordfish torpedo bombers lifted off an aircraft carrier. They swept in on the Italian fleet, anchored in its base at Taranto. The Italians hadn't expected it. Three of Italy's 6 battleships were crippled. 4 months later, Britain struck again. The Italian fleet was again caught off guard off the coast of Greece. A 4th Italian battleship was damaged.
Gotta give it to him, man. Look at, imagine.
Mussolini's challenge to the British Navy was finished.
Technology that they didn't have that we have today.
It was a turning point for Hitler, too. It was now clear that Italy could no longer be depended on to maintain control of the Mediterranean. It meant his supply line.
We can do a tighter shot. We can change it.
What in the hell is this?
In early 1941, the Luftwaffe bombed Malta. The island took another severe battering. The attacks continued, month after month. Yet the British garrison hung on. During an interlude in the German bombardment in autumn 1941, it even managed to step up its attacks on the Axis.
doing my best to just hang on and not fucking just completely like ignore the fact that there's a Fed meeting, but I'm just worried that even if like we go through this Fed meeting and we don't get the follow through, there's a few things that I do like. I just showed you on the daily chart. There's a few things that I do like on the daily chart on the ES that kind of show us that we could start to see this week and the next week a possible sell-off. It's all going to depend on oil, but the ES looks ripe for a pullback. The problem is like the SPY is you have your 200-day right in the way. Right in the way. 660 on the SPY. And it's going to be pretty much the same on the ES. Excuse me. We got back above, failed. We sold off. We bounced back to retest that support level up there at 680. Yesterday and Monday, you were bouncing to retest 680, and now we're selling off. So maybe I'm going to just go ahead and look for any bounce backs to just take a short long term. We also have energy rising again. The longer that persists, the question is you may want to, do you want to do this before or during the Fed meeting? Because volatility in and of itself is going to get high going into Powell's speech. So if you think this market's going lower, with or without Powell and this Fed meeting, and you think energy prices are just going to continue to rise, and you're okay with you have to be aware of the news. They could call the whole thing off, and oil's selling the hell off like that. But if you think the market's going lower, in my opinion, I think it would be wiser to get in before the volatility picks up and you have to pay 20-30% more than you would if you would have just gotten it before the Fed meeting. It's a risk you got to take, though, if that makes any sense. Let me see here. So 2 o'clock, what I'm going to do is I'm going to pull up the so there's the SPY. Today is March. We did not get summary of economic projections then. Let me see. Wow, that is crazy. We have an April meeting this year. It's not crazy, but it is. Because last year you had January, March, and then May and June. This year, January, March, April, June, July. That's so weird. This schedule is so weird. But it feels like it fits. I just don't know why you have one. Like you really go into August, September. Okay, so it would only be August and November. And February. In May, there's only 3 months. Okay. That we don't have a meeting. Okay. Buy's starting to pull it in here. Wonder what financials are doing. Let's look at NVIDIA. Look, NVIDIA, those contracts are up to $1.50. Man, I'm hoping we can get a bounce back going into 2 o'clock. But it doesn't look like we're going to. All right, it's 116. 116. So that is a rejection of 183 on NVIDIA. Sorry, here's what I'm going to do. I know exactly what I'm going to do here. I am going to bring up the summary of economic projections from the very last meeting that we had. And then I'm going to leave them. And then we're going to see, do they change and how much do they change? And that could be our market moving. So the very last one we had in 2025 was in December. Just pull this up. So if we look here, it says here in conjunction with the FOMC, held December 9th, they've submitted their projections of the most likely outcomes, real gross GDP, unemployment, and inflation for 2025 to 2028 and over the longer run. Each participant projections were based on information available at that time. Okay, so let's go in here. Median central tendency range. So, change in real GDP. September projection for 2026. 2.3, 1.8. Unemployment rate 4.4. We're actually a little bit higher than their last. Well, we're not there yet in 2026, but we're higher than that. So 2025, they have it. So they have the unemployment rate, okay, going lower, just kind of like staying the same, but going lower, which is crazy. I can't wait to keep this up and compare the two. Like, how could they not see 6%, 5%? Like, going out to, like, 2028. Like, you should at least see 4.8. This is crazy. So, PCE inflation. So, they have inflation coming down, which it is. They probably didn't expect this war and this spike. So, they were talking about 2026 being around 2.4 on average. September's projection 2.6, roughly. Core PCE 2.5. All right. They are projecting the Fed funds rate right around 3.4. It's about where we're at right now. And look at this, like I was saying. Look at the 2027, 2028 projections. 3.1, 3.1. You know, and if you look, your 2-year it has risen, but we're practically in those areas. We're in those levels. You know, you obviously have like a lower to a higher range, 2.9, 3.6, 2.8 to 3.6 in 2028. But this doesn't get wider as I go. So this is honestly going to be interesting. This is really going to be interesting. Okay. This is going to be really interesting to see what happens today. So, midpoint of the target range for the Fed funds rate. Let's see here, 2025, 3.5% roughly is where the majority of everyone fell. You're talking about 2026 Fed funds to be right there around 3. So that low 3. So really unchanged from 2026, 2027. Hell, going even out further, still around 3. They don't know. They don't know where they want it, I guess. But whatever, but they still expect the unemployment rate, right? The unemployment rate to tick down for whatever reason. Change in real GDP. So 2025, 6% range. Projections change in the real GDP 2025, 2028, and over the longer run. So this year they expect, this is going to be important too. I can't wait to go over this when they release it. But they expect GDP to be in between 2 to 2.4. 2 to 2.4. September projections, they go all the way from 1.4 all the way over to 2.6. Really in that 1.8 range is where they find themselves. So 2028. So they think GDP, this is hilarious. This is what doesn't make sense, guys. I hope to God somebody's here. Okay? I hope we have at least one viewer. We don't. So they expect the unemployment rate to tick down, but they have GDP also ticking down. How does that one make any sense? Maybe they didn't think about that. Maybe they don't really fully see, oh, well, I did this and I did this, because you're doing PCE, GDP, and inflation. So they're like, oh, but I think this is going to be here, but then it doesn't jive once you look at it all the way through. If you think unemployment is going to tick downwards the farther, 3 years from now, how the hell do you have also GDP going lower too? It's kind of hard to have both of the same. If people aren't working, how do you expect them to buy things to keep the wheel a turning? That's what doesn't make sense to me. It's kind of funny. And this is again from December, just a few months ago. All right, so we'll look at projections for the unemployment rate, 2025 to 2028, and over the longer run. So here we go. You can see here, which direction is it moving? It's moving towards the left. It's moving lower. But they also have GDP above it. 2026 does okay. And look, it's also moving to the left. It's also moving to the left. So that's strange. That's weird to me. I mean, I get you can include AI. It makes perfect sense in that regard. But if everyone's not benefiting from it and it's physically not paying them, then how do you get unemployment to tick down and while also having GDP tick down? It's kind of funny. So they're expecting around 4.0, 4.0, 4.2, 4.2, 4.2 to 4.4. So they expect GDP to kind of slow up because of these interest rates, but kind of stay in the same range, right? Not necessarily move much at all. We'll see. I cannot wait to compare what they did yesterday to today when they release it. Here's PCE. They expect PCE also moving to the left. They expect PCE to come down. 2026, they're expecting right around 2.3 to 2.5. Okay, 2027, 2.1 to 1.9. Really big on that 1.9 to 2.0 in 2028. I don't blame them. I agree with that one. So, projections for the core PCE, right? That's also down and to the left. They expect it to go lower. All right. So we have distribution of participant judgments of the midpoint of the appropriate target range for the federal funds rate or the appropriate target level for the Fed funds rate 2025, 2028, and over the longer run. So 2026, they have it, their medium projections 3.13 to 3.6. Okay. So the 2-year right now, guys, is just above 3.6 because of the data that we got a few days ago. So here you go. This isn't the Fed funds rate, but this is our 2-year. 3.7. It was all the way down to 3.4. That's pretty much your target for 2028. Let's go down. 2028. 2.6. 3.1. And then it just flatlines from 3.3 to 3.8. So it looks like in 2028, they would much rather be closer to that 3.1, which makes sense with the unemployment rate. If you think the unemployment rate's going to tick down, then, the problem with all of this that nobody talks about is just because they lower the front end of the curve or the closest end of the curve, the 2-year, just because they work on bringing that down does not mean that that 10, 15, 20, and 30 year is also going to come down with it. I think people, have the Fed lower rates. Well, that doesn't mean your mortgage payment's going to get any lower. It could actually go higher. So, I don't know. It's kind of funny to me. All right, anyway, uncertainty and risk projections for the GDP. All right, 2020 all the way up to 2028. There you go. 2. Right around that 2% mark. And what else do we have here? Risk projections of the unemployment rate. Right around 4. We have PCE inflation. They have it at 2. Again, really 2, and that's from 2027, year-end 2026, out to 2028. So, 0.75, 0.75. So this is going to be, it's going to be interesting. It really is. Changing real GDP 2025. 8, 1.1, or 1.7, 2.1, 2.3. Unemployment. Forecast uncertainty. I gotta find something to snack on or something. I'm gonna put that down. Give me 1 second. I'm gonna be right back.
They better that people are expecting. Meantime, Williams-Sonoma is among the S&P leaders after reporting strong earnings and comps. Revenue missed estimates, but they are hiking the dividend by 15% to 76 cents a share and saying they continue to gain market share, and that has WSM up 5%. Sticking with housing, the builders are struggling to post a 4th straight day of gains, and that was after a 9-day losing streak to start the month, the longest in 8 years. New numbers show mortgage demand is down as rates are back on the rise. Let's bring in Diana Olick. Diana?
Well, Kelly, mortgage rates last week jumped to the highest level since the end of last year, and that hit refinance demand hard. Last week, the average rate on the 30-year fix for conforming loans with 20% down jumped from 6.19% to 6.3%. That's on the Mortgage Bankers Index. As a result, applications to refi a home loan plunged 19% week to week. They were still 69% higher than the same week a year ago when rates were 42 basis points lower, but that annual gap is shrinking fast. Now, applications for a mortgage to buy a home did manage to eke out a 1% gain for the week and were 12% higher than the same week 1 year ago. Mortgage rates did come down from Friday's high to start this week, according to a separate survey from Mortgage News Daily, but they did pop a tiny bit higher this morning following that hotter than expected PPI report. You can see, though, they are still significantly higher than they were just at the start of this month. Not a great look for the all-important spring housing market, which officially begins Friday. There is slightly more inventory than last year, but home prices are still higher nationally, and consumer sentiment in both housing and the economy is weakening. Kelly?
All right, Diana, thank you very much. Diana Olick to Angelica Peebles now for the CNBC News Update. Hi, Angelica.
Hey, Kelly. GOP Senator Markwayne Mullin testified today in his confirmation hearing to lead Homeland Security that he would require judicial warrants for federal immigration agents to enter homes and businesses. He was responding to questions about an internal ICE memo during Kristi Noem's tenure that allowed for the use of administrative warrants for entry and arrest. Democrats have demanded that DHS rescind that memo. Egypt is cutting energy use as the country struggles with soaring fuel costs amid the war. Starting March 28th, malls, restaurants, and other retailers were told to shut down by 9 p.m. to conserve energy. Egypt relies heavily on natural gas imports for much of its power generation, and the country says its energy import bill has more than tripled since the war began to now more than $1.6 billion a month. And the trust responsible for paying restitution to the creditors in the collapse of crypto exchange FTX announcing it will distribute about $2.2 billion on March 31st. It's the fourth such distribution since the company collapsed and founder Sam Bankman-Fried was convicted of fraud. Kelly, back over to you.
All right, Angelica, thank you very much. Coming up, the chip makers are trying to get back above their 50-day moving average. A sign of weakness, or is upside momentum building in the space? We'll check on those charts right after the break. Just off session lows, the stocks look to be snapping a two-day win streak, but a lot still to happen. We're about to hear from the Fed, and the S&P and NASDAQ are still higher on the week. My next guest is considering taking some risk off the table. Jonathan Krinsky is Chief Market Technician at BTIG. Jonathan, good to see you. Are we in the red for all the major averages now for the year, the Russell as well?
I don't know if fan, but yeah, we're definitely weakening, I would say, making lower highs, lower lows over the last couple of weeks. And we're coming into some pretty key levels for the major averages, I would say.
Let's talk about those key levels. What are you watching?
So for the S&P 500, we've been trading below the 20-day and 50-day moving averages, which are now inflecting lower. So those come in around 6,800, 6,870. So we've really been saying you need to get some closers above those short-term levels to regain that kind of short-term upside momentum. But barring that, we're kind of keying on the 6,550, 6,600 level on the S&P 500. That's kind of the November lows and the 200-day moving average. Yep. And if you were to lose that after what we would call a pretty decent period of distribution, that would suggest, a potential breakdown towards the 6,000 level for the S&P. And I think, when you take a step back, it's the distribution we're talking about has really been going on since last October. If you look at the Russell 1000 growth index, that peaked last October. The equal weight NASDAQ 100 actually has basically made zero net progress in about 10 months. So any of the weakness we're seeing is kind of preceded any of the escalation in the Mideast, which is why we think even if you get a short-term resolution there, it's not kind of the end-all be-all to this the weakness we're seeing in parts of the market.
That's interesting. And you think the Mag 7 is going to remain heavy, to use your phrase. The semis, the SMH, you think you continue to see downside risk here, and you do see upside for the energy stocks. Is that right?
Yeah, so, tactically, coming into March, we thought the Middle East escalation was, like we've seen a lot of other periods, just very short-lived, kind of quick blip, and that would mean energy markets would revert back lower. But clearly, we've seen a sustained bid in the commodities. Gasoline futures actually hit a new cycle high today, and those energy stocks, which we also thought, initially were just kind of poised to pull back, have kind of held those gains and continue to push higher. So I do think, the trend in energy clearly is more than just a little blip at this point. And then back to your other point about the semis, look, semis are the strongest part of the market by, outside of energy. They're the most important part because they're the biggest industry group within the S&P 500 at about 15%. And so what we've been saying is, the market's already lost software. It's already lost, to some extent, financials. It really cannot afford to lose the semiconductors. And I think, the reaction to Micron tonight into tomorrow will be quite telling for that group.
Yeah, I do. We are all going to be hanging on that, I think, to see what happens. Jonathan, thanks. We'll leave it there for now. Appreciate it. Jonathan Krinsky, BTIG. Coming up, WTI crude is back towards 100 a barrel, despite President Trump temporarily waiving the Jones Act. But it's not all priced equally in the energy complex. We'll dig into some of the differences across grades of crude, what it means for global demand as the price at the gasoline pump hits $3.84 today. We're back after this.
Oh, look at this. J.D. Vance delivers remarks in Auburn Hills, Michigan, amid ongoing war with Iran on gas prices. It says here, will announce a couple of things in the next 24 to 48 hours. Keep that on your watch, because I'm telling you, they may say, hey, we're starting to pull out. Or, we've hit our targets. We're going to, I would keep that on watch. Oil's now breaking that previous high. Now we got to watch to see what the SPY and the Qs are going to do. So I'm going to eat this. We're going to get ready. We got about 20 minutes.
We are about 20 minutes, a little less than that, from the Fed decision. And keep an eye on the oil prices today. Both Brent and WTI are climbing, but it's Middle Eastern oil that's really soaring. Pippa Stevens is here with that story. We just heard about Egypt doing 9 p.m. curfews. Pippa, what does it all mean for international demand?
That's right, Kelly. So we do follow Brent and WTI so closely because they are the international and U.S. benchmarks with a lot of liquidity. But to show the extent of the current disruption, it's helpful to look at Middle East crudes. Both Dubai and Oman Blend have now surged and are trading at over $150 on the spot market. That's according to Platts, significantly above Brent, around 103, and WTI at 96. That's as of yesterday. And these prices are helpful to look at because it's not a market of speculators. The spot prices are for true buyers and sellers.
I ain't talking nothing there. Okay, so I found an LP640 yesterday. Obviously a die-cast model. It's pretty fucking sick. Maybe I'll show you guys my new LP6 model die. LP600 or LP640. It's actually pretty sick. It's really nice. I'm surprised I even found it. I'm like, dude, who the hell let this sit on the shelf? How did it even make it to the shelf? It's actually a really nice model of one. So, all right. So let's see here. USO. I'm going to throw up TLT. I have my levels for the most part on USO. Pretty much watching this 120 level. Seeing what happens here if we break. I don't know if the Fed meeting has any bearing on energy price itself. I think that would be more of a news catalyst driven type of trade. I'm going to log out. I'm going to log back in. But if there is something that comes out, you know, this, and I have the Fed. Okay, so I still have up here. This is important. Wait till you guys see this, right? We're going to compare them as soon as they release them, and we're going to go through them. We're going to compare them really quickly, all right? Right now, just 2 months ago, in December, we'll say 3, they said we're going to have a lower unemployment rate with lower GDP. See, it doesn't say it here. Change your real GDP median. One, you know, it's saying, yeah, it is. So look, 2.3 in 2026, 2.0 in 2027, 1.9 in 2028. They do have inflation coming down. Where was it? Let me go over here. We'll just use this. We'll just use this right here. 2 to 3. Median projection still right there around 2. Target range for the Fed funds rate. So here we go. So we have a bounce in GDP going into 2026, but then from there, they think GDP slows down. So 2028, longer run, 20, like say 30-30 or 2030, I'm sorry, 1.6 to 2. 1.8 to 1.9 is really, they don't know, but that's where their estimates are. But then 2028, right? But then they have GDP coming down, and then unemployment rate. I hate to do this again. Unemployment rate 4.4. So that's, they have the median range ticking down. Okay, they have it ticking down. Okay, maybe I was wrong. Or what did I see? Where was it that I seen? Okay, so here it is. Okay, so yeah. They have it also, the unemployment rate. Yeah, right here. Yeah, they don't have the unemployment rate going up, right? I was getting confused there. because they have GDP coming down, but they have the unemployment rate, also going down, which doesn't make any sense. How are you going to have more people employed with less productive things for them to do? So I get it. AI. Look at oil right now, guys. Look at oil. Hold up. What's going on here? Is there any news? No, 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 no.
Introducing the boldest Cheez-It Crunch.
Come on, please hurry up. Dude. What is going on? Looks like everybody and their mother's going to be alive, so I may tune
in 0.1 lower or 0.2 lower.
Okay, so he's already doing
that is a range that you could go 2027 that might not move.
Yeah, you're late on that, Josh. All right. But at least he's doing it.
Through all
it's in defensive mode.
CST.
All right, so energy is really starting to pull back here. Sorry, I was just trying to see what's going on with if we had any news, but this is just a level breaking here on USO. We talked about it pre-market that, this was the level. You have a nice tail coming in here. Let's see if you get a rejection here. What is TLT doing? That's what I wanted to do. So we have up TLT, bottom right. Okay, pull up the US 30 year. Bink, US 30Y. Okay, if you really want to take advantage of the 30 year or the 20 year with this Fed meeting, TMF, buying shares outright if we start to see, a sign that, say the Fed says we don't think that inflation is going to persist, this, that, and the third. But again, we're going to just wait and see because we're going to compare these two right here. Okay. They have GDP coming down and unemployment also coming down, which doesn't make sense to me. All right. This was December's meeting. All right. So they think unemployment's going to be about the same, but tick down to like that 3.8 unemployment mark. Right. They have it ticking under 4, but you don't have it right here. Right. Look, 4.5, 4.4, 4.2, 4.2 for 2028. But if you go down here, and you start looking at all of their ranges, see that's GDP. They have GDP also coming down. But how are more people going to work with less things to do? That doesn't make any sense. So maybe they just kind of didn't think about that after they did all this. They're supposed to have formulas and everything that they use. See, they have unemployment rate also ticking down with the GDP ticking down. I don't know. Okay. We have 10 minutes. I'm going to get the Fed meeting up. So energy's pulling in, SPY. I think, in my humble opinion, let me log in. I've been watching NVIDIA. If something happens, we've been watching the 180 puts. Okay, 180, 250, 183. We've been struggling, but this is a really nice support level here. We'll see what happens. You had that pre-market pivot low here at 182 or at 183. That was also everything is extending off, like the levels that we're using is off of. So here you go. That earnings low right here to the left. Low, 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 low. That was the low of day on the earnings sell-off. Every time you got up there, you rejected. That's going to be up there at like 185. goes all the way down. That actual low of day is like 184.32. Okay, so you can see I would just use 184. We got up above there, tried to hold, failed. Tried to get up, failed Friday, sold off. We got back up there. You got back above the 100-day Monday off of that meeting. Boom, you were rejected. So now, here we go, 184. You got above it pre-market yesterday. It failed. You rejected it, right? It was kind of a break and retest. Now you're starting to reject 182, and then you quickly regained it, but you're not doing anything, right? You regained 182, but you're just sitting there. It's not like, oh, we broke it, but then we got back above it, and then we started extending higher, like the buyers stepped in. So NVIDIA, we're watching the 180 calls, or 180 puts for Friday. That's if we get a sell-off. Because I think you have really, like the 20-day, 50-day, 100-day, you have really nothing in the way. Right? I think, you have the 200-day, but if we're paying, look at this, $1. If we're paying $1 for a move that we could get 80, look, that's $2. So that's a $4 move for $1. I'd take $400, $500, $600 on a dollar. Technically at $1.04, $1.05 right now, the bid ask. That's Palantir. Why is Palantir up there? What the truck? I know what that Palantir is. That Palantir is the those. Let's see. So here we go. 117, 119, 120. All right. So that's Nvidia's 180 puts. And I'm not saying we're going down. But I like the price. All right, so there's NVIDIA. Not really a stock that's in play here. TLT, USO, Palantir. Those were the 150 puts on Palantir. That's what that was on the options chain. Okay, ES, QQQ. So Qs are back below that Monday pivot low. Okay, I'm gonna get Powell for us. Let's have it. Listen, don't force trades, guys, unless you see it. Unless it's there. Don't waste your time. Don't waste your money. A lot of these chart setups are trash. Like you just have to give it time for the market to set us up with some really nice trades, right? Last week, the week before that, the past 3 weeks have been pretty nice. If you know what you're doing. It's one of those weeks, It is what it is. It's one of those weeks. Let's get Powell in here. Let's get Powell live, baby. Let's go. No, we're not gonna
This morning?
2:30. I'm sorry.
To
I don't know what's going on. Let's see. Yes, let me get the Fed
You can manage your
up. 56. Again, make sure you're up to date. There should be no lag. Right now it's 156. You got about 10 seconds. 3 seconds. 12:57. All right.
You guys.
Let's see. I'm just bringing up the Fed site. Okay, so here we go. No, Fed count. Come on, what are you doing? So give me 1 second, guys. Let's see. Federal Reserve. News and events calendar. Okay. Whoa, 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 killer. Whoa, killer, whoa, killer. Simmer down, simmer down, simmer down. Simmer down. Okay. I was lying. Let me finish logging in. Let's see here. This is not where I want to be. I can tell you that right now. That is not where I want to be. Just bear with me. I apologize. So we're gonna watch Monday's high, and that Tuesday low pivot, and Friday's high. Friday's high, Monday's high, Tuesday's pivot low. Okay, so here's this. I'm not gonna go back. I'll just find it on the Fed's website. Okay. Monetary policy, news and events, news and events, news and events, news and events. Okay. Calendar, monetary policy, calendar, about the Fed, news releases, calendar. Should be under the calendar. 3. Oh, what? Here, let me do this. Because this always happens every time I go to the Fed site. Let's go back. Meetings, calendars, and information. Where am I? Monetary policy, federal FOMC. News and events, monetary policy, monetary policy, monetary policy, monetary policy. I got it now. Let me go back to where I was. Go back to where you were. Okay. FOMC calendar right here. Bada bing, bada boom. See what I mean? It's a little bit of a hunt. So here we go. It's going to pop up right there. We got it right here, guys. So here's the PDF. So let's do our comparison. In conjunction, there goes the S&P trying to bounce. Likely outcomes, real gross domestic product growth, the unemployment rate, and inflation rate for each year, 2026, 2028. Over the longer run, each participant's projections were based on information. Okay, whatever. Okay, so unemployment rate, 4.3, 4.2, still going lower. That's insane. So let me pull this up. Market's not really doing anything. And here, okay, so to the left, we have 2026. To the right, we have December. Okay, come on, you turd. Come on. So I just want to see if they're taking back anything or not. I know this is a pain in the ass, and I apologize. Okay, here we go. So unemployment rate, December projections, changing real GDP. So previously, 1.7 changing real GDP, 1.7, 2.3, 2.0, 1.9. A decrease. Here, they actually have a higher target for GDP, but still a decrease, 2.4, and then going out to 2028, 2.1. So they've raised the GDP forecast, which is okay sign. Not that they're correct or anything. This is just an estimate. Unemployment rate, 4.4, okay, for 2026. The unemployment rate, now they have 2026, 4.4, unchanged, 4.2, 4.2. So not really changed, but they have it still a bit lower, but not to the degree. PCE, 2.2. So they have 2026, 2.4 in December. And now they have it at 2.7. So they have this year, they have inflation or PCE up. No, I apologize. I take that back. PCE inflation for 2026, 2.4. 2026, 2.7. So I am correct. Here's what I got to do, guys. I'm sorry. Let me block out 2025 for December. So there we go. So I was right. All right. This year, 2.7. They were expecting last year 2.4. Still September, they were looking at 2.6. December projection, they're looking at 2.4. So PCE, they still have it right around 2, but falling. 2.7 this year, 2.2 next year, 2.0 2028. Core 2.7. Okay. Let's see here. All right, so unemployment rate. So let's go down. All right, let's go down. Unemployment rate really kind of unchanged. FOMC midpoint target range for the Fed funds rate. This is also important. Wow, they're actually keeping it higher, around 3% all the way out to 2028, 3 to 3.4 to 3.25, and that's kind of where we are. So look, let's see. I haven't looked yet. Is the 2-year bouncing? Look, the 30-year selling off, which is good, but what's the 2-year doing? It's also, see, it's there already. See, the 2 years already there. It's at 3.7 already, and we've been there. So, 2026, they have it at 3.5, 3.8, 3.5, 3.8. Okay. Projections of real GDP from 2026 to 2028. So they have it around 2.4, 2.2. And then they have it a drop at 2.0 to 2.2, and then at 2. So right around the same, but everything is falling. Like, they have GDP falling. I don't understand that. They have GDP falling, but then they have the unemployment rate also falling. I don't know how you get that. And I'm not talking about either one of these falling or rising in a dramatic manner, but it's kind of the same, but it's kind of like they have it, and that's why you're probably seeing the market not move even the past few weeks. Like, everything's kind of like right around the same, but pulling back. So PCE, we already talked about that. So GDP and unemployment, really, I'm not worried about PCE. So the unemployment rate here, they also have that pulling back with GDP. So they're looking at this year, their target range is 4.4 to 4.5. Next year, 4.2, right? 4.0, or really it's 4.2 to 4.4. Okay, so right around the same. And then 2028, 4.0 to 4.2. So what gets you there? If you have GDP not rising, how do you have the unemployment rate lowering? I don't understand that. So, like, they're thinking this thing's going to start getting back down into 3.84 range. So that low 4 is just looks to be their target, and that's cool. I can dig that. Let's see here. Let's go see. Oh shit! I just exited out of it. That's okay. I'll use this one. All right. So let's go back. Let's go see what they said. And look, the market has not moved at all. I didn't think it would, and I said this. I said it. There's a chance that nothing happens today because of we already know what's going on. So here's their statement. Available indicators suggested the economic activity has been expanding at a solid pace. Job gains have remained low. Job gains have remained low. So they're first starting out with the unemployment rate. They're talking about the labor market. That has remained low. So that's not good. They want people to be able to work. If there's not, they want job gains. They want they want that. And unemployment rate has been a little changed in recent months. Inflation remains somewhat elevated. The committee seeks to achieve maximum unemployment and inflation rate of 2% over the longer run. Uncertainty in the economic outlook remains elevated. The implications of developments of the Middle East and U.S. economic are uncertain. The committee is attentive to risk on both sides of the dual mandate. In support of its goals, the committee decided to maintain a target range for the Fed funds rate of 3.5 to 3.4. In considering the extent and timing of additional adjustments, the target range for the federal funds rate committee careful assess incoming data, the evolving outlook, and the balance of risk. The committee is strongly committed to supporting maximum employment and returning inflation to 2% objective. In assessing appropriate stance of monetary policy, the committee will continue to monitor implications and incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risk emerged that could impede the attainment attainment of committee's goals. The committee's assessment will take into account a wide range of information, including readings, labor market conditions, inflation pressures, inflation expectations, financial and international developments. Bada bing, bada boom. Voting for monetary policy, blah, 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 blah. Decisions. All right. The Board of Governors unanimously maintain the interest paid on the reserve at 3.65, effective March 19th. Policy decision. New York. Let's see. Instruct others to execute transactions into the system in accordance with the following domestic policy directive. Let's see. Undertake more necessary federal rate. So 3.5, 3.4. Standing overnight repurchase agreement rate of 3.75. They didn't really give us any. Let's see. Do they? No, they didn't. They didn't. You know what I would like to know is what are we doing with NFCI? We got to look at that. I want to know what the amount and what they are doing with the with, because if you remember, they had talked about a slight increase in monetary easing, right? So as to what amount, right? What would be the amount that they would be, or did they decide on it? So hopefully somebody asked that question this month. Hopefully today somebody asked that. Because it would be it would be nice to have an idea of the liquidity that they're going to provide. And to what amount. I would like to know that. I think a lot of people would like to know that. So, all right. So we're pretty much unchanged here. The 2.5 is sitting at 3.7. Wish I had another one. That was a huge move. So TLT probably got the biggest move here, I would imagine. It hasn't really moved, but it's really been like the SPY did not move at all. That's insane. I had a feeling this was going to happen. I guess we're going to find out here when we get the meeting. Another point to that is we are still like you didn't even try to make any highs at all. So it's looking pretty weak here. Let me do this. Let me get rid of this anchored VWAP real quick. I know you guys can't see it, but just give me 1 second. Boom. Okay. So Monday, Tuesday. So this should be red here. We get a bounce back into it. All right, let's go ahead and turn on. Let's get this up. We are going to have Powell here in the next 15 minutes.
There we go. So that's a little bit bearish.
What? What do you think is bearish?
We decided.
Ain't nothing bearish about that report. It wasn't bearish or bullish.
Hello.
Come on, Kevin. You're supposed to be a CFA
Changed
and
to
all these other
little
things.
changed. Okay. Why it does this, I don't know. But we'll fix that. Oh, okay.
Why is 3.4 great for the near term?
All right, there we go.
People forget that has no bearing on the 10.
Let's see here. Dual side of the mandate, side-by-side strike through the conversation.
That's probably why the 30-year pulled back, because they didn't raise rates.
So,
like
looking at the sheet, they removed
you need to relax.
Shown some signs of stabilization. Shown that part. Shown some signs of stabilization in employment. It's been changed. Changed a little changed. Implications of development in the Middle East are uncertain. Right. Implications of...
He knows what he's doing. I'm just kidding. Maybe he does, maybe he doesn't. I don't know. But I think the more important thing here is, how do you think you're going to get a lower unemployment rate with lower GDP? That makes no sense. How do you think more people are going to work with less work to be had? All right. All right.
Is news in Fedland, and yet the market doesn't pay attention because there's another game in town, and it's everything else in the world. And some people might say, oh no, the adults can't control this. They can't step in and save us. And the other people will say, we haven't had a free market in a long time, and this is what it looks like. And guess what? It's a welcome exercise. And so those two sides of the debate are playing out in markets today.
You think we've got a free market?
Well, I mean, that's the whole thing.
The markets aren't doing anything. They're not playing anything.
I'm kind of excited about this. I mean, that's kind of a nice thing, not to have the thumb on the scale all the time and the same story over and over again.
It's a change.
All right.
It's a change.
I'll get off
Stephanie Roth of Wolf Research, I can see how excited you are. You're not alone. You've been waiting for that moment for a long, long time. Major moves. 5% away from all-time highs.
Even the Japanese market. It's now exciting. Who knew?
Oh, they're actually trading the benchmark in Japan now.
There's actually traders.
Stephanie, I'm sorry. Stephanie Roth of Wolf Research joins us now for more. Stephanie, we need your reaction to the decision and where you expect the emphasis to be in this news conference.
Yeah, I mean, the emphasis is going to be on the reaction function, provided that energy prices end up staying longer. The question is, are they going to end up looking through this, or do they ultimately end up having to be dovish as a result because growth will end up slowing? And our own view is that because the economy is so different today versus 2022, they'll ultimately have to be more dovish as a result of the war in Iran rather than the opposite. Otherwise, it tells you a story of productivity and that growth is actually going to be higher in the future years, but then, nothing else changes. And the one thing that we didn't talk about, or that wasn't talked about yet, was the longer run dot shifting up a little bit.
Well, this to me, Stephanie, that I'm really wondering about is, how much does a more dovish Fed enable something that looks more like 1970s or more like 2022 and what we saw with inflation and the read-through? Is that something of a concern for you?
No, because the backdrop is so different today versus, say, 2022. If you look at 2022, the unemployment rate was 3.7 heading to 3.5. Today it's 4.4. Payroll gains was growing at 600,000. Today they're somewhere between 0 and 50,000 on average. The inflation backdrop was different. Core inflation was 5.5. Today it's 3. So the idea that we're going to have a repeat of 2022 seems like a very low likelihood event, and therefore that's not something I would expect the Fed to react in that way, because the data probably won't support a reflationary type of environment.
Stephanie, given a war, given what oil's doing, John mentions it's 60 to 100, even higher, we're still slaves to the job market. And the answer is the unemployment rate hasn't broken. With the war, with the distractions, how ex post is this Fed into the summer?
Yeah, I mean, I think they're going to be in an environment over the summer where base case is the unemployment rate is probably steady, but they're going to be looking at this most closely. That's going to be the deciding factor between whether they are able to cut, probably not at Warsh's first meeting, maybe in September or December.
Right.
And it's going to all come down to the unemployment rate. Is it notably above 4.5, in which case they have a window to be able to ease? And if not, then it's going to be tough for Warsh to get the rest of the members on board.
Bob, synthesize Michael Feroli's work on this then. The fact is the labor market hasn't cracked yet. They have to wait, don't they?
I think that's part of it. I'm still gobsmacked by the Fed's decision. They're basically saying all of this going on in the Middle East is a speed bump. That, inflation will tick up, 0.3 and 0.2 here and there. But the economy will accelerate, unemployment will stay stable,
they're not
and
saying
it's
that.
off to the races.
They're
I
saying
just don't see
GDP.
that. I think there is a real impact to inflation and then ultimately to
saying
the
GDP
economy and the labor market.
This is the heart of the matter, John. This is the absolute heart of the matter, and everybody has to recalibrate their x-axis to how long is this going to go on, and then you get to demand destruction.
We mentioned this earlier, and I think it's important to keep going over it. We've repriced a lot in this market. We've repriced energy.
Whether you're a seasoned off-road...
Man, I swear to God. There's one
It's actually nutri-rich, rich in...
Yeah, bro.
Now, a lot of easing for the Federal Reserve, and we've priced, I think, for this year now. Yet we haven't repriced growth, and the Fed hasn't either. And I'm not just talking about where spot and look at where December is trading right now. We're close to 80. So we've gone from the 60s to close to 80s on the December contract, and the Federal Reserve has lifted the outlook for growth. What's driving that?
I wonder how much momentum they think is in the economy, how much AI and data center spending is going on. Were they surprised by the Delta earnings and that, you know, sales are at a high?
Guys, we have 10 minutes. I'm going to go over a few charts real quick. Let's see here. Quick run through. All right, we'll start with big cap, Apple. Let's look at it like a 30-minute chart. All right, Apple at what you could say is a support level from last week. Wednesday, Tuesday, Monday. So that was not something I want to look at. It's just unless something happens here, I don't know. It's not something I want to look at. Let's look at Microsoft real quick. Microsoft still flat. I think, I still think I wouldn't be surprised if we see more downside on Microsoft, to be honest. It's not letting up, and that's cool. Let's go look at the banks. And the problem with Thinkorswim is they have all these lot orders that they had to print, and it's just the ugliest looking chart. See? Just so ridiculous. So ridiculous. So banks are bouncing, which is odd because you are seeing the 30-year pull in. Actually, it's trying to bounce a little bit. And what that is that 30-year and that 2-year, the 2-year rises and the 30-year, they clamp in on each other. And that really starts the further that they go into one another. Let's just say the 2 years at 3 and the 30 years at 4, and there's a 1% gap, and you start closing that gap, you're shredding the margins on banks to make any money. They can always charge different fees and raise those fees, but ultimately, that's how they make their money on their loans, and that's what they're there for. They're there to give loans. Okay, JP Morgan, let's go look at Capital One. I traded this beginning of the year when you had that news. It's just done nothing but go down. I think I talked about it on here. Okay, I was short. Well, probably one of my best trades that I didn't let finish out. I should have hung on to this one, but what do you do? All right, let's go look at Goldman. The 30 years just chilling. So Goldman's right at the support level here. All right, you have the 200-day moving average as well. Just, I don't understand, man. A lot of these charts, in my opinion, they don't look good. They don't look good. So it makes me not even want to, fool with them. Abby, just give me a minute. You have food. All right, so that's bank. Let's go look at WFC real quick. Wells Fargo. It's not doing anything. Let's go look at Meta, Amazon, and Google. Again, I may end up just watching the Qs and like the overall markets because the setups on them are a little bit better and I can trust them a little bit more. Friday, so that's Monday and Tuesday's low low you rejected. I don't really like that chart. Go look at Google. All right, so Google doesn't have too bad of a setup. The problem with Google is you're right into these moving averages, which is kind of going to stop you from, giving you that, you know, as soon as you make a move, you're going to start running into support, and you don't have that much runway. Let's go look at Amazon. Amazon's had a nice move today. I'll leave that. Let me get rid of this. Okay, so look at this wedge. I can already see this, right? Look at this ascending wedge. Bink. Bink. And it sold off right there. You guys may not be able to see it, but like I said, they are reversal patterns. We just found one earlier. Right there. Anyway, not important. Not important at all when we are looking for setups. Previous lows. So this is Friday's low. Monday's low. Going negative. This sucks. This sucks. All right, 5 minutes here. 5 minutes for Powell. Let me AVGO. You also have, look at AVGO right here, guys. If you break below here and we do have a bit of a sell-off, I'm going to be honest, I wouldn't mind looking at this major support level here at 319, 320. Come on, Thinkorswim. Just work with me here, please. Okay, it did. It did it. So I'm going to make this a 2. You guys can see we've broken that. It rejected earlier, a couple weeks ago, and now we're back under it.
Keep your whole home happy.
This Friday,
We have one mission.
Whatever. I don't care about your mission.
Swank there breaking down the Fed decision. If you are just joining us, welcome to the program. The news conference about 4 minutes away with the chairman of the Federal Reserve down in Washington, D.C. In any other time, at any other moment, we'd be talking about the penultimate meeting of the Federal Reserve chair, but we have not spoken to a single person today who thinks this is the penultimate meeting of the Federal Reserve chair. And most believe Chairman Powell, including the former Fed vice chair, is going to be sticking around for at least a few more months.
Partly because we don't know when the confirmation of the next Fed chair is going to be, and that ultimately lies with the man from North Carolina, Tom Tillis. Ultimately, though, there is this question about credibility for the Fed, continuity. I just wonder if he gets up there and he says, what we do doesn't matter right now. As long as we don't hike and as long as we don't cut that much, we're not in the driver's seat. I mean, ultimately, this is their pass to say, this is an economy that's moved on from us. We are not in control. We are watching it just like you.
Unspoken, John, will be the idea of the recent election results, including yesterday in Illinois. And I also point out a set of allies saying no to the president on this war, and that Mr. Powell, representing the institution, will stay around more so than the last meeting.
A big piece of this bull case for this economy and for this market has been tax refunds. We hear that phrase get bandied around all the time on this program, tax refunds, tax refunds. How big are these tax refunds actually going to be? And how are attitudes towards the economy changing given the shock of the past few weeks? Where will that money actually go?
Well, we're seeing it now when we look at Chase deposit accounts. We're seeing particularly the bottom couple quintiles of earners see their deposit balances start to go up a bit. But the uncomfortable truth is they're now paying that out again at the pump. And we can't forget that businesses and households were already paying a higher tax because of tariffs on prices. And now energy prices are going to create yet another tax on their disposable income.
Brammer, the squeeze is real. The energy bills are severe, and they were high already, and now they're getting higher.
You know, Delta and American were perfect examples of how the economy is doing pretty well and people are still spending. The difference is that the costs are getting that much higher. And so the room that people have and that companies have to do okay is getting narrower and narrower, and the Fed's watching this, and they don't have the silver bullet to really make this a better situation.
I did scientific surveillance research today.
Here we go.
EWR to Charles de Gaulle was popping the two of us. You could easily do it for $7,000, and you're enjoying it this morning just under $11,000.
Are you pretending you don't fly business?
just don't see anything, guys.
Is that what you're doing?
No, it's not premier. We're not doing the first class thing, but business class, I'm going to suggest is at least 20% instantly.
Is that Polaris? Is that United Business Class? Is that the front of the plane?
I actually.
And I'll get us to like the four squares so we can see, you know, oil, TLT, and, you know, commodities.
For everybody to know,
we live in different worlds.
For everybody to know out in the world, John and I are in steerage, and you're on the Gulfstream 450.
That is such a load of.
Nice one, TK. Hey, Bob, before you go, just a final word. About a minute away from this news conference. What are you looking for?
I'm looking for a couple things. I want to understand how they're thinking about the war and the elevated risk to both sides of their mandate. And then secondly, I want to know how they got to their forecast numbers. I think Diane's right. There needs to be some explanation there. And the explanation could be quite simple. It could be, well, one member put in a 6% growth rate. Okay, well, let us know that.
Well, let's get into it in just a moment. The chairman of the Federal Reserve entering the room after leaving interest rates unchanged. Let's take a listen to the chairman of the Federal Reserve.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices.
Searching for a reliable used SUV? Shop the area's best.
Fuck you, YouTube. I fucking hate this fucking thing, bro. You don't put fucking...
Bringing it within a range of plausible estimates of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total core inflation, it's about 3%, and some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind, and the question of looking through when it does arise will be one to approach not lightly, but in the context that you mentioned.
And just on the S&P, can you help us make sense of why there is still a bias to cut for most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? Just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so, there are 19 people, and so 19 reasons, 19 individual submissions, but and if you notice, the median didn't change, but there was actually some movement toward, a meaningful amount of movement toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut. And each person has individual
so far, she did not
stories
ask,
behind what they
how
want
do
to
you
do.
guys
But essentially,
plan
it is
on,
that,
or how do you
the
think
forecast is
unemployment
that we will be
levels
making progress on inflation, not as
or,
much as
I'm
we had
sorry,
hoped, but
yeah,
some
the
progress on
unemployment,
inflation. It should come as we start
decreases,
to see in the middle of the year.
And GDP
Progress
also
on tariffs
decreases. How are more people going to get
inflation
employed
coming down? We should be seeing that.
I'd love
And
to hear that.
the rate forecast is
Guarantee
conditional
you they
on the
don't
performance
ask
of the economy. So if we don't see that progress, then you won't see the rate cut.
Thank you, Howard Schneider with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just this.
It has been just an incredible way for me to engage more broadly. The AHA
So for whatever reason, people did write up their inflation forecast. That will certainly be tied to of the slow progress we've seen on tariffs, which we believe we will see. It's just a question of how long it takes for them to get all the way through the economy, and it just takes some time.
Right. And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy?
So I didn't get the second part of your question.
The consumers are going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there that can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction. To your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected pass-through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one, because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down, and this is something that is that people wrote down. So, we don't debate how long, how do you do that? We wouldn't be able to debate what the length of or size of these effects would be. We just have to kind of make an individual statement. And also, what you've written down before you'll be reluctant to move too far away from that just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid, and inflation, the overshoot is mainly from the goods and tariffs. And, the labor market is, the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs, with little growth in either demand or supply. But the U.S. economy is doing pretty well. It's just we don't know what the effects of this will be, and really no one does.
Steve.
Mr. Chair, in the past, the staff has suggested that higher oil prices, they have a hit to consumption, which Howard was talking about, but that's somewhat offset by increases to domestic production. I wonder if you could talk about that dynamic, especially to the extent that how much U.S. production is happening right now.
So the first thing is there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, your question was?
What the staff is saying about, and has said in the past.
Yeah. So there'll be an offset.
Offsets, yeah.
So that's true. We have, we're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period of time, meaningfully higher. So I wouldn't say there's much of that happening. Not much will be happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that, having looked through tariff inflation and inflation running above target, and looking through the oil price shock, would undermine the credibility of your commitment to the 2% target?
We have to do our analysis and think these things through carefully. But of course, that's on everyone's mind. We're well aware of the history, but you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be, actually. And, it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can cause trouble for.
Xanadu has announced negotiations of up to 300.
I think I'm just going
to anchored at 2%, and I think it's important that we do that. Very important that we do that. Very important.
Nick Timoros, Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well, as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not. Remember that a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent, to the extent those prices the tariffs are paid by consumers on a one-time basis. And we're waiting for that process. It takes 8, 9, 10, 11 months, a year to go through the system. And we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system so that goods inflation will return closer to what it's always been. I mean, it used to be, for many, many years, it was negative. And then, the year before tariffs came in, it was 0. And it's running at like 2% now. So, And so that's kind of goods inflation is running at 2%. So that's not coming from standard Phillips curve restrictive restrictive policy. It's coming from the runoff of a one-time thing. We also think it's important, though, to keep policy either mildly restrictive or close to that, but not too restrictive because of the weakness in the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates or not cutting anyway. So we're in a difficult situation.
I think we could get a nice
and we
long
feel like
here. It opens up, but
our framework calls on us to balance the risks, and we feel like where we are now, which is kind of on that borderline, the higher borderline of restrictive versus not restrictive, we feel like that's the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Labor non-housing services they basically moved sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services. But we're not seeing progress there. So we do, what we expect for next year is continued, what we want to see for this year, rather, is continued progress on housing services, finally seeing that, the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see. But it's a good question why we didn't see much of that last year.
Edward.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation. CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and, in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, you can. We're at 3.0% core. Inflation 2.8% headline. So we've been well above the 2%. That amount, whatever it is, 0.7, 0.8, or a full percentage point above 2% for some time, and that's a concern. We need to get back down to 2%. And we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard-pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly. On the question of whether I will then continue to serve as a governor, and I will make on what I think is best, on what I think is best for we're going to set the dominoes off there, Edward. And I'm not going to have any more to say on those issues, by the way.
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent do you think we're in a different place today? Thank you.
You know, it's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may, just on the BLS report that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story, to a large part being a supply-side story, has changed, despite the quite negative number in February. Would that be the right take, and was there anyone else in the room who thought differently, and that the February jobs report was cause for concern?
So I think you have to take the two together. You know, in a way, the January report was a positive surprise, and the February report was a negative surprise. If you put them together, you get something in the middle, and I think you have to really, as you do, I'm sure, realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability, but the thing that I think good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually that looks like that's about what the economy needs in terms of dealing with very, very low, non-existent, really, growth in the labor force, which, of course, we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now that's balance, okay, but you know, I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So you know, we look at that, we see it, we get it, and I mean, everybody understands the arithmetic, and that's you can say the break even is zero. But nonetheless, it's something we're watching carefully, and you know, are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there, and but nonetheless, something we watch carefully.
Andrew.
Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common, and does the central bank need to start taking account of the risk of supply shocks as a more common problem?
You know, we did go through a long period where the shocks were all demand shocks, and you know, so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years, for sure. And it's just a very different thing, and a much more difficult thing, because it does immediately raise the question of tension between the two parts of our mandate. But you know, has the world changed? I mean, COVID is a one-time thing, right? This energy supply shock is a one-time thing. It's not because of some broad tendency or anything, I don't think. And you know, the oil shock with Ukraine was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks. But you know, there's people have written that paper and that speech a number of times. A number of people have tried to make the case that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Okay. You said last year that the Fed
This
was
fucking
reviewing
guy is
its
knocking me out,
communication
man.
strategies,
It's so
including the
boring.
S&P as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that, but I guess, what would you change about Fed communications if you had the time? Thanks.
What happened about that was not much, and I'll tell you why. So, we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your.
Part of me's waiting for a.
Hello. Sitcoms are back.
And I'm going to get rid of these ads. Watch.
I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg
Not
Television
one
and Radio.
question on how are you going to
show
get
in January,
GDP
some
or
members of the committee
unemployment
wanted to
down
include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
So it did come up today. The policy that the possibility rather that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case, and of course we don't take things off the table. But you correctly characterized, what was in the minutes that several participants indicated, and something very much like that conversation did happen. What was your second question, though?
I was just one question there, but follow-up would be, there are a lot of goods besides oil that are trapped in the Strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether, if this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing and that kind of thing. The truth is, it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens, and it'll come down to how long the current situation lasts, and then what are the effects on prices, and then how do consumers react and that kind of thing. Really, I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see.
Afternoon, Chair Powell. Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal, but there are some colleagues of yours who have pointed to higher dispersion in household service, in business services as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee, and what were the views of what is the state of inflation expectations and the risks from higher oil and gas prices.
So at this meeting, I mean, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you can always find one that's troubling or some aspect of one that's troubling, but ultimately, right through this whole period, the overwhelming majority of the things we look to, including markets, including surveys of the public and also of forecasters, they've all been pretty solid on longer-term inflation expectations being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a lot of conversation about that. I think everyone does agree that we'll be watching those extremely carefully as we see effects of the price increases come through from the conflict.
And still on how the discussion went across the committee, before coming to this meeting, there were some members who were like discussing the risks of a slowdown in growth and at a time of where inflation remains high. It really doesn't seem that most members are penciling in a slowdown in growth.
No.
But has there been any discussion of the risks of stagflation at this point?
So people actually wrote up their growth forecast by a tenth, and I think that's probably to do with just growing confidence in productivity. But sorry, and your second question was just.
If there have been any discussions about the risk of stagflation scenario.
Yeah, so as I mentioned, there is tension between the two goals, right? The upward risk for inflation and the downward risk for employment. So, and that puts us in a different situation. You know, when we use the term stagflation, I always have to point out that was a 1970s term at a time when unemployment was in double figures and inflation was really high and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal, and we have inflation that's 1 percentage point above that. So calling that stagflation, it's not. I would reserve the term stagflation for a much more serious set of circumstances. That is not the situation we're in. What we have is some tension between the goals, and we're trying to manage our way through it. It's a very difficult situation, but it's nothing like what they faced in the 1970s, and I reserve stagflation for that, the word for that period. Maybe that's just me.
UPXY, guys.
Elizabeth.
Thanks much. Elizabeth Schulze with ABC News. President Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that.
When we're thinking about the impact on American households, as you know, they've been facing these higher prices for years. They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
If they could afford 9%, they can afford.
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time, and of course people will feel that, but I don't want to speculate about what that might mean, because honestly that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Victoria.
Hi, Victoria Guido with Politico. I just wanted to ask, for purposes of the next meeting, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have oil prices, above $100 a barrel the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
We'll have to wait and see. I mean, we always say we're going to learn more by the next meeting, and usually we do, but in this case we're going to learn a lot, because we're going to learn 6 weeks to the day till the next meeting, and we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves with what happens in the Middle East. That's going to be a big factor, and we'll know that then. I don't know how it's going to affect our thinking. I really don't. And we did talk about alternative scenarios a little bit, but it's just, I wouldn't bring that in here. It's very uncertain, and I just want to remember that we don't know, and we shouldn't assume it's going to be one thing or another. We're going to see.
So is it a matter of you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy could still remain relatively durable in face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, made it's been strong through a whole bunch of challenges. I mean, if you go back to 2023, when we raised rates a lot in 22 and 23, and close to 100% of
resilient.
economists called for a
Literally
recession,
said
which
that.
didn't happen. In fact, 2023 was a really strong year. So the U.S. economy has really been just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see. And I don't know what's going to happen in the next intermeeting cycle, and I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
Hi, Chair Powell. Thanks for taking our questions. What makes you so certain that tariff-related price increases will be a one-time effect? I don't think we've seen you since the Supreme Court tariff decision, and it's pretty clear that none of us know what the extent of the tariff shock will be as the administration moves to replace some of the tariffs that were overturned. So I suppose I'm curious, what would make you question this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word certain about
See?
my
Thank
views
you.
on that. I'm not certain. I'm uncertain.
Like,
But
why?
just
I'm going to
if you
say
think about
this,
what
and
it
y'all
is,
can
you're-
get mad
it's
at
a-
me,
it's a-
but why was it the black person? Why was it the black girl that said that? Why couldn't it have been a white one? Like, come on.
A one-time increase in the price of a good, right? And what inflation is ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs.
You must be new. I've never seen her there before.
Monetary policy would react, you would, it would be over. So I don't have tons of confidence on that. I mean, I think that the theory is probably right, but as usual, the time it takes to get all the way through the economy is just very uncertain. And we found that coming out of COVID, that the inflation did go away, and largely for the reasons we thought it would, but it took 2 years longer than we thought, and so I think we have to be humble about knowing how long it will take for tariffs to go all the way through the economy. And so what we've been doing, as our staff's been doing, it's very interesting. They started off with just an estimate because there wasn't a real history, and then they've built, based on the history that they're seeing of tariffs coming through into prices, they can now have an arc. And for all the tariffs, they can say, well, so we have, I think, a slightly more confidence that we will see tariff inflation coming down, not prices, but you won't see further increases. And we should start seeing that more and more in the middle parts of the year. We do expect that. Now, you're also right, though, that the level of tariffs came down fairly meaningfully in the wake of the court decision. But the administration said they're going to get that rate right back up to where it was. So, and we assume that they'll do that over time. So that's how we think about it.
Thank you.
Well, hi, thank you. Chris Rugaber at Associated Press. You talked about the shortcomings of the SCP in this environment. I wanted to ask about, or throw in an additional thing, which is the fact that it's happening before transition. Is there still some value, perhaps, in the public knowing what other Fed officials are thinking, the ones who will stay on for the rest of the year and beyond, and does that even handicap your successor in any way?
There's one question that still
just
hasn't
in
been
terms
asked.
of having a whole committee expressing its views, is that something that locks them in for the rest of the year?
I don't know what he's talking about.
No, we never. The SEP is never. People are more than happy to change their SEP dots. They're no way bound by them. It's your opinion at a moment in time, which can change based on events. Sometimes very quickly. So it never locks people in.
I want to see if we can look for a reversal
people are
on the
more than
spot.
happy to
I
be
just want to
proven
see
wrong
if
in
it
either
can
direction.
start to reverse.
And so I just think we do it. And I mentioned this was a time when it's very hard to do it. During the pandemic, we actually took one meeting off, I think, but we don't like to do that just because it's hard to do. We should just keep doing it. But I just would say for this one, though, I think it's even more than usual good to take the forecast with a grain of salt because it's subject to just very high levels of uncertainty.
Hi, Chair Powell. Brian Chung with NBC News. So you mentioned at the beginning of this conversation that you're well aware of the history of inflation running above target.
That
It seems
is
like
definitely
that might
an
be
AI
what's
face.
underpinning the
Stop.
affordability
You're
problem
not
that we're
fooling
hearing
me.
a lot
That's an
about
AI
on
face.
Main Street. Are there any signs to you that that's impacting the psychology of the consumer,
That's AI.
especially given that they're a big driver of overall economic activity?
I'm not sure what that's all about, but I'll tell you what I think and what we see in surveys, and that is, there were big price increases all around the world, by the way, everywhere in countries like the United States had basically the same kind of thing. It was a global inflation coming out of the pandemic, and everywhere people are feeling like real wages have been going up in the United States now for 3 years, roughly. But people are not feeling good about it yet, and it will take some years of positive real earning gains for people to feel good again, we think. But you're right. But when you talk to people, they do feel squeezed, and there are areas where prices are still going up, like insurance. Various different kinds of insurance are getting more and more expensive, and that's just catching up really from inflationary pressures that take a while to get to into the price. So we take it very seriously. We don't dismiss it at all. It's a very real thing from the standpoint of what people are experiencing, and what it does for us is makes us even more committed, if that's possible, to getting inflation back to 2% on a sustained basis.
How does the Fed's independence play into the ability to address affordability?
Well, independence is what allows us to do our jobs, and stable prices is half of our mandate. It's one of our 2 mandates, maximum employment being the other. I mean, look at every advanced economy that looks anything like the United States anywhere in the world, in a market economy, in a democracy, and you'll see, pretty much central bank independence that looks a lot like, in some cases, stronger than what we have. But it's critical that we have that so that we can do the things when we need to do them to preserve price stability. And it's an accepted standard practice, and I think has a lot of support, certainly in Congress, which is where our oversight is in Congress. And you see that among Democrats and Republicans in the House and the Senate.
Hi, Chair Powell. Richard Escobedo at CBS News. Thanks for doing this. 2 questions. One, how high would oil prices and broader inflation have to go, and for how long, for the committee to consider hiking rates? And then secondly, diesel prices are rising faster than gas prices. How concerned are you that the increase in diesel might drive up food and goods prices and lead to broader inflation?
Yeah, I'm not going to give you an example or a specific answer on the first question. We're prepared to do what needs to be done, but I wouldn't want to hypothesize about what that might be. In terms of diesel prices. So your question there is, are we concerned about it?
How concerned, and whether or not it will drive up the cost of food and other goods that really rely on it to.
You got a suit and tie on. If you're in that room, you should at least know what the hell you're doing.
Because
you should already know this. He's not going to answer that.
Things like that. There are just lots of ways that oil and derivatives
this
of
is
oil
not a
get
person
into
or a
the
group
production and transportation of many things.
Come on, man.
And those. There are big effects in headline inflation, but things like that leak into core as well. And the effects may not be as big, but they're quite real and they're material. So we are aware of that and we're watching it. But we're right at the beginning of this, and we don't know how big you just don't know how big this will be and how long it lasts. It may or may not be something that really makes a big imprint on the U.S. economy. We're just going to have to wait and see.
Thank you.
You got to feel bad. Can't even get your answer.
Thanks very much. Just to sort of stare into the future for a little bit, I was looking at the longer run bits of the SEP. I noticed that the growth estimate had been revised up a good chunk from 1.8 to 2, and the kind of long-term Fed funds rate as well. It'd be great just to hear, is that AI productivity or what's going on there exactly?
Yeah, I think it's just productivity. We actually started seeing meaningfully higher productivity some years ago, 4 years ago, 5 years ago, and that's not because of generative AI. We won't know for years what it's really due to, but it could be due to the kind of things that people did during the pandemic to economize and and somehow become more productive because there was an incredible labor shortage. But I think economic forecasters are very skeptical of periods of high productivity because they're so rare and they're often revised away. And for many of us, I never thought I'd see this many years of really high productivity, and by the way, expect it to continue. And we haven't really started to see the effects of generative AI, and that should certainly contribute to that. So it's quite unusual, and it's this is the higher productivity is the thing that allows incomes to rise over time.
What happens
and so
when
it's
we
a
get
great
down?
thing. Was that your question?
Yeah, no, I was just curious what lay behind that. And just briefly on that as well to finish up, you hear the argument a lot, this is a sort of disinflationary story, and if you believe that productivity thing, that should also weigh down on inflation over time, maybe then kind of pull down where rates end up. Do you kind of agree with that line of thinking, or do you think that's not how you should think about where the rates
I think you have to be cautious about that, in particular if you're talking about AI, about generative AI. So remember, in the short term, what's happening is we're building data centers everywhere, and that's actually putting pressure on all kinds of goods and services that go into building these things. So that's actually probably pushing inflation up at the margin. In addition, it probably raises the neutral rate. So in the near term, you're not looking at something that would immediately call for lower rates or that would be lowering inflation. Over time, though, sure, it can be if it's expanding potential output, which is what higher productivity does, then it actually can be. But I think it's an empirical question because it's really is the demand growing faster or slower than the supply side. And I think we just don't know that answer ex ante going in. We'll just have to wait and see. Thank you very much.
Thanks, pal. Nothing. I mean, the market's just slowly selling off. I think this was it up here, 675 zone. I think you're just seeing the fact that we tried to make a reclaim of the level. We couldn't solidify it, and now this is what you get, a market that's selling off. So I'm watching 660. I'm not sure what helps us bounce here. Let's take a look at energy. Energy's bouncing right back as well. As long as energy's going to be bouncing, you got lower prices in the S&Ps. I think that's pretty, I think that's to be expected. So for right now, guys, again, I don't have anything, and I apologize. The market's slow right now. There's nothing I can do about that. There's nothing I can do about that. So, and look at this. You're getting ready to go higher again with energy. I wonder if I can make a hedge here. I mean, I could. I think it might be best to just stay away. Just continue to stay away and wait and be patient. USO, let me see something here. Let's zoom in on this. But last time I did this, it didn't work. Now, if we go through here and really read this chart on all different time frames, the question is so about a week ago, you were getting a ton of divergence. And then, you still came in with a gap up. And I think it was right here. Yeah, it was on that day. I'm pretty sure. Anyway, This is tough because it's fucking pissing me off. I tell you that. So 660, nice little support level down here. Your 200-day moving average. If we take a look here at the S&Ps, a few things that wait, you know what? Can we get this bounce back into 670 and retest it? I wonder if we can. That might be a possibility, guys. That might be something we could look for. I don't know though, because if energy, see, like right now, I feel like I'm trying to force a trade. I am. I feel like I'm trying to force a trade, and that's the fucking dumbest decision in the world. That's what makes you a loser, right? Not being able to sit on your hands. But I've been sitting on my hands this whole week, and I'm just like, come on, bro. I knew this shit was gonna happen. I knew it was gonna happen. I knew this fucking Fed meeting was just gonna be like a boring shit show of a cricket in the background, take a nap, ask a dumb question here and there, for Powell only to not answer your question because it wasn't even a question he could answer. Right? It's kind of like the same thing that we've had for the past few meetings. Come on, Trump, we need you. Say something. Do something. You know, I've been thinking about taking our service members away from Iraq. I think we've done a good job. You know, America, it's great. I think we've hit our targets. I think they understand. They understand now. But don't take my weakness, my kindness for weakness. Okay? You know, the gas prices, they're going to come back down. They're going to come back down so quick. It's going to be beautiful. Come on, we need something like that, bro. Sorry, I've just been fucking... I just can't do a Trump impersonation right now. Some days I'm good at it, some days I'm not. So, but we need you right now. We need you. I need some volatility. You know, you had a nice trade here over at Tuesday's low, but it's just... All right, I'm going to go listen to something on YouTube. You know what, guys? I think I'm going to get up out of here. You guys have a great rest of your week. What I'm going to look for is if you see a hold down at 660 or so, I may take my shot down there. I might. There's no way a fucking Super Allegra is 1.5. So he's not even showing a Super Allegra. Never mind. All right, you guys have a great rest of your day, okay? I love y'all. That's what I'm looking for. Just looking for pullbacks. And seeing if there's a shot to get long. I don't know. Just going to sit on my hands. You know, I'm just going to sit on my hands. So there's your bounce back reversal on the ES. Let's look at the NQ. Let's see what I'll see you guys on the other side, okay?